Ground investment grade silver market is maybe $60 billion. If just 1% of global wealth tries to hide in silver, that is $1.5 trillion, trying to squeeze into a $60 billion market. The price has to go up. There's no other option. Safe haven. Number 3, productive assets, land, energy infrastructure, water rights, commodities. These are real things. They produce value in any currency system. A farm produces food, whether the dollar exists or not. An oil well produces energy, whether treasuries are safe or not. These assets are inflation protected. Because when inflation rises, the price of food rises, the price of energy rises, and the value of the asset that produces food or energy rises with it. This is the portfolio of the post-dollar world. You want to own things that cannot be printed, things that have intrinsic value, things that people need, regardless of what happens to the financial system. Now, let's talk about timing. When should you make these moves? The answer is now. Not next week, not after the Fed announces QE, now. Because once the announcement is made, the window closes. Here's the likely timeline. February to March 2026, China continues dumping treasuries. The 10-year yield rises to 4.8%, then 5%. Mortgage rates hit 8.5%. The housing market freezes. April to May 2026, the stock market cracks. The S&P 500 drops 15% to 20%. Treasury auctions start to struggle. The bid-to-cover ratio, the measure of demand, starts to fall below 2.0, signaling weak demand. June 2026, crisis point. The White House and the Fed hold emergency meetings. Yields spike above 5.5%. The financial media starts to panic. Headlines scream, bond market crisis. This is when the Fed announces the restart of QE. July to September 2026, the Fed starts buying $100 billion per month of treasuries. The dollar drops 10% to 15% against major currencies. October 2026 to March 2027, the slow grind. The Fed keeps printing. China keeps selling. The dollar keeps falling. Gold grinds higher to $6,000, then $7,000. Silver follows to $150, then $180. This is the wealth transfer phase. Paper assets are dying. Hard assets are exploding. April 2027 onward, the end game. Either the Fed stops printing and lets the economy collapse into a depression, or they keep printing and let the dollar collapse into hyperinflation. Historically, central banks always choose inflation. They always choose to print. Because politicians cannot survive a depression, but they can survive inflation by blaming it on external factors. So the Fed will keep printing until the dollar loses its reserve status. And when that happens, gold and silver will be the only assets that matter. This is the timeline. This is the roadmap. And you have maybe 60 to 90 days to position yourself before the crisis becomes obvious to everyone. Now, before I close, I need to take a moment to address our community. We are Bullion Watch. We are the original channel. We spend our days digging through treasury data, analyzing capital flows, tracking precious metals markets, and connecting the dots so you do not have to. We have noticed a surge of copycat channels. Same avatar, same style. They are stealing our scripts. They are reposting our content. They are trying to build an audience on our research. I want to be clear, we have only one channel, this one. We do not have a Twitter account selling crypto signals. We do not have a Telegram group asking for donations. We are not on TikTok. If you appreciate the deep dives, if you value the forensic analysis, please help us protect this community. Go down to the comments right now and type, "Staying with the original." Let the algorithm know you are here for the real work, not the copycats. We read every comment. We appreciate every subscriber. And we are committed to bringing you the truth about precious metals and the global financial system, even when it is uncomfortable. Now, let's bring this home. China has fired the first shot in the economic World War III. They are dumping treasuries. They are building an alternative system. And they are forcing the Fed into an impossible choice. Print money and destroy the dollar, or let rates spike and destroy the economy. The Fed will choose to print. They always do. And when they print, the wealth transfer from paper to metal will accelerate. Gold is going to $7,000, silver is going to $150 or higher, and the dollar is going to lose 40% to 50% of its value. This is not a prediction. This is the mathematical endpoint of a system that has $36 trillion in debt and a central bank that is forced to monetize it. The torpedoes are in the water. The explosion is coming. And the only question is whether you're going to be holding paper or metal when the ship goes down. Get out of the danger zones, get into the safe havens, and get ready for the greatest wealth transfer in history. Thank you for being part of the Bullion Watch community. The checkmate is complete. The Fed has no moves left, and China is about
This is The Real Story with Michelle McCory.
Hello, I'm Michelle McCory, and you're watching The Real Story here on Miles Franklin Media. And gold just surged past $4,940 an ounce. Silver is pressing $97. And we're seeing a pattern. New highs followed by brief pauses, followed by new highs again. We are a few weeks into the new year, and so far gold is up over 13% year to date. Silver is up over 35%. And the very institutions that once dismissed gold as a relic are now racing to rewrite their forecasts. Goldman Sachs just raised its year-end gold target to $5,400 an ounce, citing something crucial. They're saying that they are seeing increasing demand coming from private investors who are staying in the trade. Now, what's interesting here is that this is not the usual short-term move into gold as an election hedge or geopolitical trade. Goldman is saying that these gold positions are different, that they are being driven by long-term concerns about fiscal sustainability, debt, and currency debasement, which means that they are far less likely to unwind anytime soon. In their words, these positions are stickier. So investors, private investors, institutional investors getting into metals and staying in the metals because they have deeper concerns about fiscal sustainability, monetary credibility, and the long-term path of the global system itself. And this suggests that this move is about positioning for what is coming next. And that brings us to Davos. Because at the World Economic Forum, the language has shifted. We were hearing some more open talk of a new monetary order, of fractured alliances, of a world no longer anchored to a single reserve currency. And political leaders seem to be openly acknowledging what some markets have been quietly pricing in for a while now, and that is that the old framework is under strain. The global order is shifting. Now, layer on top of that rising geopolitical tensions, strategic flashpoints like Venezuela and Greenland, and it is clear that we are not just watching a metals rally, we are watching a signal. And joining me now to break it all down is someone that has been flagging this for years, Andy Schechtman, CEO of Miles Franklin Precious Metals. Andy, so much to discuss.
Good to see you, Michelle.
Always good to see you. And you know, Andy, every time I talk to you, another record high in gold, another record high in silver. I mean, every time you and I sit down, it feels like that our previous interview has been so outdated price-wise. So let's just quickly focus on the big picture here, Andy. We have gold surging past $4,940 an ounce, silver almost at $97, both which you have called. Now, you've been covering this market for years. We're seeing a pattern, as I said. We have new highs followed by a brief pause, maybe a bit of a pullback, followed again by new highs. So what is your read here, Andy?
I mean, I think, Michelle, all you need to see is the amount of deliveries coming on the COMEX, and I can make it very simple. When I started talking with you about this stuff several years ago, it was about the central banks purchasing gold and the repatriation from the Bank of England and the New York Fed. But now it's progressed to massive deliveries coming on to the COMEX market, entities standing for delivery for billions and billions and billions and billions every single month for going on 16 months. At this level, that's all you really need to see. To me, that's all that is relevant. The people who are standing for delivery for literally in December, as an example, the largest delivery of silver in the history of the COMEX market in the month of December, somewhere in the neighborhood of 68 million ounces of silver. Who's standing for delivery for 68 million ounces of silver? Every month, 3, 4, 5 million ounces of gold or more. This is going on repetitively, and there is no one talking about it. To me, there's nothing else you need to see. So these pullbacks that we see, like we saw this morning, are, to me, not anything other than a gift. Now, it's hard for someone to really, look, short-term caution, sure, anything that's gone up this fast. Long-term bullishness, absolutely, they can coexist together. But I think that when you look at a market like this and see the deliveries, see the rate hikes in margin that do nothing but knock it down for a day or two, shaking the weak hands off, then it goes right back up, seeing the lease rates elevated forever, seeing the arbitrage in China at a $8 or $10 difference in price on silver. All of this stuff, to me, would have destroyed the price of gold and silver in years past, like it did in 2011, where they jacked the margin rates up and it never came back. Took 15 years. These things, this market is laughing it off. The people standing for delivery do not care about margin. They don't buy on margin when they're spending billions and billions and billions of dollars. And I just think that that is all you need to know. So when we see a pullback, to me, it is not about a whole new bunch of supply that has been dumped onto the market. It is about unwinding of leverage and of speculation and being shook from a position of rising margin responsibility and the selling that incurs as a result of it. But it always used to, when that happened, it would just fall and fall and fall and wouldn't come back. And now all of a sudden, it's like a speed bump and it comes right back. So to me, you don't need to see much else than to see the demand that is coming at the very highest level here in the United States.
So help us understand what standing for delivery means and how these contracts are usually resolved. I mean, people sometimes just pocket the trade in terms of the paper silver. Help us understand what that means to actually now say, no, actually, we want the physical silver with the futures contract, or the physical gold for that matter as well. And how does this compare sort of percentage-wise in terms of how often people actually stand for physical delivery?
Well, most of my career, which is almost 36 years long, no one stood for delivery. Less than 1% of contracts stood for delivery. And that
less than 1%?
Less than 1%. And that is what I've been screaming about for the last several years. And, you know, it started with a group that the COMEX calls the others. Now, they publish a report every week called the Commitment of Traders, which would show the positioning of the largest traders. And it was always just two subcategories: the commercials, JP, Goldman, Citi, the specs, the hedge funds. And one would go long, one would go short. And around 2021, we saw a third group of reportables that was added to this weekly listing of the biggest traders, and they called it the others. And they're still there. We believe them to be sovereign wealth funds in particular. But I started talking about in so many of my videos that something's going on here because big money is now standing for delivery. Now, I don't know the exact percent of it, but I will tell you is that the amount of deliveries that we've seen in the past 15, 16 months here in COMEX, on COMEX, is akin to 4 feet of snow in Death Valley in July. And I guarantee you they're not going to open up snowmobile dealerships if that were to happen in Death Valley. It's an anomaly in every respect of the word. And what does it mean to stand for delivery? That means instead of being cash settled for your contract or rolling it over for another month in the future, they are saying, no, we want the metal right now. And it's delivered into the COMEX ecosystem. A lot of it leaves COMEX, goodbye, and never comes back. Where is it going? We don't know. Is it going to China? Is it going to the Treasury via the Exchange Stabilization Fund? Who's taking it? Is it Tesla? Is it Samsung? Is it Sony? Who's doing it? Now, a lot of it stays in the COMEX, and there are two categories of holdings inside the COMEX. Miles Franklin has 8 Brinks facilities within its storage program. One is in New York City. That is JFK. That is a COMEX facility. I have clients that have a large amount of silver in 1,000-ounce bars in their account, and that's called eligible. Now, eligible means it is eligible to be sold, but it is not for sale, and my clients aren't going to put it into the COMEX anytime soon. Registered, on the other hand, means those bars that are backing the contracts that could stand for delivery. So what isn't leaving the COMEX goes into safekeeping ineligible inside of a Brinks vault or any of the other COMEX facilities where it's not for sale and it's just being held there for safekeeping. Because again, when you think about 68 million ounces, well, if a mint box of Silver Eagles, 500 ounces, weighs 42 pounds, how much do you think 68 million ounces weighs? And who's taking it? Where is it going? How much is leaving? The relevance of it is that it is standing for delivery. The COMEX was never really designed as a delivery mechanism, but in order to maintain credibility, all of these contracts have the ability to deliver instead of cash settling or to use as a hedge. Typically, if we look at these two remote controls here as inventory in my warehouse and a COMEX contract, if I have 3 million ounces of silver in my warehouse right here and the price falls by $10, well, I'm screwed. I'm down $30 million. But if I sold short the exact same amount, they go inverse of each other. The COMEX was designed originally to offset risk, but it's been turned into a delivery mechanism. And the biggest, most well-informed money in the world is doing this. And one of the things that I find to be shocking, Michelle, is the lack of media coverage of this. None, zero. And that's almost, fine line between conspiracy and reality. But where is journalistic integrity? Why is it that we have to talk about this all the time? And no one is saying who's standing for delivery for billions
So
and billions.
who is standing for delivery? I know I'm asking you to speculate here, but what are some of your theories on this?
I mean, part of me feels like it's the Exchange Stabilization Fund, like it's the U.S. Treasury. I mean, so far in January, which is not a delivery month, I don't know, somewhere around 40 million ounces has already been delivered. I haven't checked it, but I would assume that's about where it is. It was in the upper 20s last week. So even if you take the upper 20s and you add it to the 64, 5, 6 million ounces that was delivered in December, the largest ever, you're at roughly 100 million ounces in the last 45, 50 days that have been delivered. Now, is there any, I think, coincidence maybe that the government classified silver a critical mineral and they just passed a law saying that the government will put price floors underneath critical minerals within the next 90 days? I think that there is this fine line between, could it be Samsung, Sony? Could it be the government not telling us? If it's done under the Exchange Stabilization Fund, they don't need to get congressional approval. They don't need to tell Congress up front because it's for national security. Well, silver has now been made a priority for national security. And so I guess all I'm trying to say is that it's incredibly unusual. And the people at that level who are bringing in that kind of money, who have been following what the central banks have been doing, in my mind, that's all you need to see. And you can see that this is not a mania. It's not a mania because even though we're doing tremendous volume in business, it's not the volume that we saw during Silver Squeeze, where everyone was buying little bits, even a couple $1,000s, or where the public was starting to expand. Now, these are the people who we've worked with for a long time, or the people who have been watching you for a long time, or me, or others, who are finally saying, it's time to actually do something meaningful here. And we're seeing much larger orders. Our average order size right now is exponentially larger than it's ever been. These are people who are concerned, who are aware, and are seeing the same things that we're talking about, but they represent a tiny portion of the public. The public is still vastly unaware of this, and that's due to the fact that how do you explain that we have gold and silver at all-time highs, and it's nowhere to be found on the mainstream media? It's not on 60 Minutes or on the cover of any newspaper.
It's, to be fair, it is starting to make headlines because at some point you cannot ignore these astronomical increases and rallies. It's not really into the how or the why, but you are starting to see headlines on the mainstream because you can't ignore it. You cannot ignore when silver is up almost over 185% year over year. You can't ignore that. Even financial mainstream media. But to your point, the whys and the details get glossed over. I do want to bring up something, Andy, because you said that this trend accelerated, the standing for delivery trend in the COMEX accelerated after President Trump returned to office. Is that a coincidence?
You tell me. Is there such thing as a coincidence at that level? I don't think so. And most of the media attention that you speak to frames it as it's reached its peak, it's topped, it's overbought. A lot of the things that I would argue, if there was really informed journalism, these things that are valid perhaps in a market that is freely traded, but a market like gold and silver, which has never been allowed to find real price discovery. And I think that's undebatable. I mean, that just isn't debatable that metals market have been suppressed for various reasons. We don't need to go down that road again. We've talked about it ad nauseum. But how valid is technical analysis in a market that has never been allowed to find price discovery? In a market where the West has controlled the paper price forever, but that's breaking. And it's breaking because of the standing of delivery, whether it be in London or the abnormal, massively abnormal deliveries we're seeing here on COMEX, to be naked short in a market that is backwardation. Like, for example, let me just say one thing here. I want to read to you one thing. I mean, I think anyone that would be short in a market that is backward, that is in backwardation, is as silly and stupid as a mud wall. TD Bank is one of these morons who, came out and they're one of the ones that are short. And they come out and they say to their public, they say, we enter short spot anticipating a dramatic reversal in prices as silver's devilish blow off, framing it negatively because they're wickedly short. Blow off top comes to completion. And it goes on to say, TD Securities entered a short position in silver futures in early January, betting the price would fall towards $40 an ounce. They placed a stop loss around $92 an ounce to limit losses if the price went the other way. What do you think happened last Friday? At a great expense to TD Bank, they got stopped out. If you play short in a market where you used to be able to do that and drive down the price, not only through shorting, but through rhetoric, it would work and it wouldn't come back. Now, they knock it down, great. You got people that are standing for delivery for billions of dollars worth. Say, thank you so much, TD Bank. We'll take all of that and watch what happens to the price. And we're going to stand for delivery too. So you need to come up with that silver, not just a papered over payment instead of the real thing. It's an existential threat to these banks, and they proved it in a very, very short period of time, showing just what happens when physical demand overtakes paper manipulation. And that's why I've always felt that the only way you can successfully manipulate a market over a period of time, the way the Western central banks did, is to push it in the direction it's going. And they held it down. No one wanted it. But all of a sudden, there are some very sophisticated people and very wealthy people and very well-informed people, whether it be the central banks or whoever the hell is doing it here, or whoever has been draining the LBMA, and they're like, okay, fine, we'll play that game, and we don't play on margin, so go ahead and short it and watch what happens. And maybe that's why the Economic Times just came out and said, well, you know what? The 5 banks in the U.S., they're actually net long. It's the banks in Europe and the banks in Canada that quite haven't got that memo yet, and this would prove true with TD Bank.
A lot to unpack there, but do you expect, Andy, a moment where this lack of physical metal is exposed in a way that the market can't paper over? I mean, what is the most dramatic outcome that can happen when we talk about this long-standing manipulation, when we talk about how there's so much more paper silver than physical silver? Is there a point where this actually gets exposed, and what would that look like?
Well, it would look like what it looked like to Bear Stearns. And I've talked about this forever, the interview that Bart Chilton did with both Andrew Maguire and Chris Marcus, and then died shortly thereafter. I'm not saying that there is a correlation there, but he came out and said Bear Stearns failed largely because they held the largest short position in silver. This is the head of the CFTC, the Commodity Future Trading Commission, the commodity police, just like the SEC for securities. And he admitted that largely the reason that Bear Stearns failed was because they bet against silver and the price collapsed, and they let them fail. There were reasons behind why they let them fail. They were one of the only banks that didn't play ball with the Fed on something else years before, but evidently that was never forgotten. And so when the price rose dramatically, they collapsed. And this is when you get into the Jamie Dimon thing and all of the stuff that Bart Chilton talked about. It's one of the 2 videos that anyone who owns metal should watch. But the admission from the head of the CFTC that this is indeed what happened, to me, is exactly what will happen. And if you get a failure to deliver where the Fed doesn't come in and backstop, doesn't make Jamie Dimon and JP Morgan take that position, doesn't paper it over, you get a bank like for example, UBS, who realizes that the derivatives that they took over for Credit Suisse, same thing. Do you think they wanted to take them, or were they asked politely to take them? That those derivatives that they hold are worse than they thought. And you get a bank like that who has a failure to deliver, and the U.S. Federal Reserve doesn't come to the rescue, like the last time these things happened in 2008, and the United States had to open swap lines for the Swiss National Bank to bail out everybody. If they don't let that happen, and you see a systemic failure by one of these banks, a failure to deliver. Well, these banks don't just trade in metals, they trade in everything. And you start to get a run on one of these banks, the systemic contagion reaction is like a house of cards that collapses. Could that happen? Yeah, absolutely. And I think that's the mistake that people make, to think that, well, they'll never let that happen. Who's they? And isn't it just possible that when you over leverage a system to the degree that the West has, where you rehypothecate or resell the same piece of metal over and over and over and over again, assuming no one will ever stand for delivery, but everyone does, and you can't get it, what happens? It's the kind of deal whereby they say when you go long, you can only lose what you put up. When you go short, you can lose everything. And it just keeps on going. And I think that is the lesson to be learned, that it could get very, very, very ugly. Now, is it probable to do that? I hope not. But it certainly seems we're getting closer to that point when David Jensen comes on our show and he says to me, Andy, London has 2 billion ounces in contracts that are outstanding for delivery against a 140 million ounce float, which he would himself tell you, well, I question that 140 million ounce float because they had to borrow money from China recently to make good on deliveries at a far less amount than that. So all of these things are, shrouded in a little bit of uncertainty, and it's a little bit opaque, but you can see it is beginning to break. Mm-hmm. That's the same reason the LBMA perhaps said that their market most of last year was T plus 8 weeks when it's a T plus 1 day settlement. Well, we have a shortage of manpower and trucks. What you are seeing is a system that is fraying. And it started with the folks in the global South who became, motivated, sophisticated, coordinated, wealthy, and said, let's stand for delivery. Slowly, not too fast to blow it all up. Everyone says, why don't they just take it all? Because the exchange would blow up. Everyone would blow up and they'd cut off their nose to spite their face. But whether it be through an $8 premium over the Western price to slowly arbitrage, whether it be for standing for delivery, whatever it is, they're doing it slowly. You see it happening. And it's starting to accelerate. And TD Bank is a prime example. They put this trade in the beginning of January, and 10 days later, they're stopped out. Now, in years past, bang, the price goes down and it never comes back, in conjunction with rising margins on COMEX, which should knock the wind out of it too. What happened? Price fell. The people on margin had to cover their additional premium that they had to pay. They had to sell. The price fell, and bang, it's right back up again, because the people that are standing underneath it are not using margin, and they're looking at any subsidy as a gift, as everyone seems to be racing to secure what is now something for national security, perhaps.
Well, we know that it is, to your point, on the critical minerals list, and we know that central banks around the world have been accumulating gold at record levels. I'll zoom out and get to the macro conversation in a minute, but seeing, as you pointed out, the discrepancy between the East and the West, a very important signal that we're seeing in the silver market is how physical silver in Shanghai is trading noticeably higher than in the West. And we're not talking about a few dollars or a few points here. This has been a very significant difference. So what does that mean when we see that this premium has persisted, driven by the strong domestic and investment demand for physical silver in China? What does that tell us? Normally,
when you have a discrepancy like that, Michelle, arbitrage resolves it, right? But it's not resolving it because the Chinese say, thank you. We'll pay more for your metal if you have the ability to buy it here in the Western paper and deliver it in physical in Shanghai. Thank you so much. And it's just that sucking sound that you hear is them really, I guess, trying to tempt and tempt the traders to deliver metal to China for a premium, for a profit. And the fact that it hasn't corrected and it continues to say persistent says that this is their plan. They're doing this purposely. They're doing it to incentivize anyone who wants to make that big profit, where you can buy it. You take 5 million ounces, you buy it here, and you deliver it there at $10 an ounce. Well, you just made $50 million. Easy peasy, and the traders are happy. So are the Chinese with the trade imbalance that they have and shedding the dollars, de-dollarization. They don't care that they're paying a premium. They've been mining gold and silver in their own country For years, that was uneconomical because they see the big picture. And geez, look how economical it is becoming now. Now I think that they see a big picture and we don't. And so the traders who are doing this are short-sighted. That metal won't come back. It is being reintegrated into the economy, that being gold and silver. It is critical. And we've known that for a long time. And I guess it's just becoming recognized. You know, everyone talks about the United States making silver critical. They talk about China restricting exports. They don't talk about two other things that are important, and that a year before that, the European Union designated silver critical, and 2 months before China said we're going to limit exports by, you know, permitting all of the very large refineries who would have the ability to do this. They said, you know, we're the second largest producer of silver in the world, and our silver domestic production will be kept for domestic priorities. And so you have a race. This isn't about two brothers in 1980 or about leverage and speculation in 2011. This is about silver being repriced. And it's being repriced through physical demand, not through paper that has created an illusion that silver was really not that important. And I've always believed it has more to do with the military-industrial complex than anything. But whatever the reason is, ask yourself this one question. Why would 8 banks in the West control the largest concentrated short position of the roughly 1,000 commodities traded on COMEX of any commodity in the history of the COMEX in silver? 8 banks in the West, in the US and Canada and in Europe. Why? And it was because there was something far more important about silver than its price would be allowed to explain. And it's disappearing in nature, and it's vital in a advanced civilization, whether that be advanced military equipment or AI or technology, digital, electronic, etc. And that's now being exposed through delivery. You can't paper something over when everyone says, fine, but these contracts say we can deliver. Where's my silver? Then we have a very, very, very big problem. And that is, to me, what is happening. And if the Economic Times is right, following Tom Luongo's thesis, which I find to be quite intriguing, the US banks are net long. Who's left holding the bag? The European banks, banks in Canada. Tom believes that Trump is very upset about the European aristocrats. He believes, right or wrong, that they were involved in election interference. Now, Trump just said in Davos yesterday that there was election interference, and there is, and there was, and it's proof, and people are going to get indicted over this. I probably shouldn't have said that, he says. There's breaking news. Well, he believes someone was involved with it. Tom Luongo thinks that he believes it was the European aristocrats that stand behind the big European banks. Well, you know, all this metal that's come back, and if the Economic Times is right, and all the 5 banks have flip-flopped and gone long, including JP Morgan, covering a 200 million ounce short position, then where does this go if we see that moment, a contagion, a systemic failure that blows up not just one bank, but a whole series of banks, while the U.S. banks are net long and out of the mix? So I guess we'll see. I'm not saying that's my total belief, but in listening to Tom and looking at the Economic Times and looking at the Commitment of Traders report, the last one showed that the U.S. banks were net long. I mean, it did show that. They'd still have shorts, but shorts versus longs, the U.S. banks were actually, from a percentage basis, more long than short. So technically net long. We'll see what happens. But I think all I can simply say is, look, this time is different. I've never seen anything like this, ever, never. And normally when margin rates go up, normally when lease rates are that high, bang, the market gets kneecapped and it does not come back. It's taking 24 hours or less and it comes right back.
Well, I want to bring the macro view here, because you mentioned Europe, you mentioned the Europeans and silver, and obviously, as we said, Davos is happening where President Trump has ruffled many feathers, nothing too unusual for him, but I think this time he's gotten people particularly irked with the targeting of Greenland. So many interesting conversations happening at Davos, but there is one that caught my attention that hasn't gotten too much notice in the mainstream media, and this was messaging from Europe's top political leadership. Ursula von der Leyen, the president of the European Commission, in her speech, subtly just happened to bring up Bretton Woods, the global reserve currency status of the dollar, and the taking the dollar off the gold standard by the Nixon administration. And I found that it was very peculiar that she kind of worked this language into her speech. It didn't even really seem to flow in the general vibe of what she was trying to convey, but it was a very interesting paragraph, and let's play it now.
1971 was the year of the so-called Nixon shock, and the decision to delink the US dollar from gold. In an instant, the foundations of the Bretton Woods system and the entire global economic order set up after the war effectively collapsed. But it also had two major effects. It inadvertently created the conditions for what would become a truly global order, and it provided a sharp lesson for Europe and on the need to strengthen its economic and political power. It was a warning to reduce our dependencies, in this case, on a foreign currency. The world may be very different today, without any question, but I believe the lesson is very much the same. That geopolitical shocks can and must serve as an opportunity for Europe. And in my view, the seismic change we are going through today is an opportunity, in fact, a necessity, to build a new form of European independence.
I mean, there you have it. She is explicitly, this is European top leadership, explicitly referencing 1971, the Nixon shock, the moment that the dollar was severed from gold, framing it as a lesson that Europe needs to relearn today, talking about dependency on a foreign currency, about the necessity of building a new form of European independence. I mean, for me, it was a very interesting choice of framing at this point in time, especially as we've been talking about a potential change in the global monetary order. What is your read on this? What do you make?
Well, I think we're moving away from globalism. I really do, and I think gold is continuing to reprice itself on reserve demand and policy uncertainty. And I think gold will be reintegrated into the monetary system. And I think, in essence, you know, what she's really hedging at is that a system that is built upon trust, that moral high ground that we stood upon, you know, after World War II, I think has been trampled. People probably don't trust us anymore. And so when there is no gold behind it, yeah, it is a system that is, I think, inherently dying. It is. I mean, any fiat currency is inherently meant to die. And we are getting to that point right now because of a lack of trust. And that's really what it's come down to. In fact, it's because Van Eck came out just the other day, the mutual fund company, and their bond team, it was was built by, or a report written by their emerging markets bond team. I just want to read this to you real quick. You know, I've argued for a while, Michelle, that we are moving to more of a mercantile situation where countries will take care of their own ecosystem. And whether it be looking at Enbridge, which is now operational, as is the unit, and they're trading on it, along with the SIPS, cross interbank payment system, which we talked about how they had signed up the countries from Southeast Asia, the ASEAN acronym countries that represent 800,000 people, twice the population of the US, 35% of global GDP, China's biggest trading partner by far. They're using these rails now, which chips away from the settlement status of the dollar and using gold to replace the reserve status. I've been screaming this since the first time I met you years ago. And to you in our first interview, I said that, but now there's a report by Van Eck. Now, this is very different than James Rickards saying 24,000 or Mike Maloney saying 10,000 as a gold repricing. But here's what they say. They say, what do they say? Sorry, I have it right here. Okay. What if gold replaces the US dollar as the reserve standard? And I would argue that is what is happening. In more so the Treasury, each country using their own CBDC, trading with one another over rails that are not SWIFT compliant or accessible, and using gold as the reserve status, as the reserve vehicle instead of treasuries. They say in this paper, our emerging markets bond team values gold by matching central bank money liabilities to gold reserves, implying a 39,000 to 184,000 per ounce price. They talk about M0, which is the base level of money. And if they use M0, just to skip to the good stuff, liabilities divided by gold reserves at M0 is $39,000 per ounce, weighted by daily FX turnover. If central bank liabilities are divided into M2, divided by gold reserves, $184,000. They say using global M2, we calculate the global price of gold that equalizes M2 is around 100,000 per ounce, weighted by daily FX turnover for our sample. The gold price that equals M2 is 184,211 per ounce. What I am saying to you is that I have believed this for a very long time, that gold will be reintegrated as the de facto reserve status, the reserve vehicle, the preferred reserve vehicle of the world. And it's happening in the global south now. And if Judy Shelton is right, and she came on your show and mine and said that she believes, and Trump told her that he will peg the back end of the bond market to gold with the Genius Act working on the front end. If indeed that were the case, right? If you have to sell a $20 million bond in 30 years, deliver $20 million in gold in 30 years at 5,000 an ounce versus 184,000 an ounce by the time you get there, you sell it at 5,000 an ounce, and you're delivering it when it's $184,000 per ounce, you've just massively, exponentially cut the number of ounces you have to give. What else have you done? You've massively devalued the dollar. We're moving away from the dollar being the de facto global reserve currency, I believe. And I think that she is basically saying that once we cut the reserve status to gold, once we cut the tether, the line to gold in 71, that the dollar has been losing value ever since. And it is a system that has lost trust, and our fiscal irresponsibility is such that who in the hell would want to take our dollars anyway? It's ironic she mentions gold. I think that you will see more and more talk of gold replacing the U.S. Treasury as a de facto reserve settlement vehicle. And whether it be in treasuries here or to settle currency and trade imbalances in the new multi-jurisdictional Shanghai Metals Exchange platform connected to the digital yuan, which will be the rails to the M-Bridge unit tokenized currency, which is actually now working and running and has passed beta tests. So these things are happening, whether the West wants to agree with it or not. I think she's probably being a little bit more honest, kind of veiled honesty, but more honest than I think you'll hear from a politician on this side of the pond.
Well, that's sort of the MO of the World Economic Forum. They surreptitiously telegraph what is going to happen. In previous instances, like with the global pandemics, they put out the messaging, not directly, but very subtly, so that people sort of start to adjust and brace for it. And, you know, to your point, Andy, this has been a shift that you have noted for a very long time now, as we have seen exacerbated with the record purchases of gold by central banks. I mean, Goldman has it down that they expect central banks averaging 60 tons of gold per month in their latest report. They expect emerging market central banks to keep structurally diversifying reserves into gold, with purchases averaging about 60 tons per month in 2026. So that is clearly a trend that we're going to see, you know, continue. But I've always maintained that I don't see the United States just lying down and taking this, right? I've always maintained that there will be some pushback. I know you have your theory that that's perhaps where this covert purchasing of gold may be happening, this shadow program to be buying gold. And that again links back to your idea of physical delivery that we've seen accelerate since the Trump administration took office. But when you put things into context of the United States and the Trump administration starting to reflex its military muscle around the world, starting to consolidate power around the Western Hemisphere with this move into Venezuela, with this desire, very strong desire to have some kind of sovereignty over Greenland. I mean, what does that signal to you as a potential next step here?
That they are pulling away from globalism. You have Howard Lutnick, who just came in to Davos, and he said the same thing. Globalism has failed, and that he came out and publicly said this, and I think that's kind of the theory here, is that we have to worry about ourselves first rather than everybody else. We have to protect ourselves, and we have to bring back manufacturing, or our kids and our grandchildren have no future. We're $200 trillion in debt. We're uneducated. Ray Dalio just came out and said 60% of America has a literacy rate under that of the 6th grade. Here comes AI just to take all the jobs just in time, and we don't make anything. The only way to make things or to sell your goods to the world is to abandon the reserve status. I believe that's what they're trying to do. They don't want to be the reserve status. They want everyone to trade their own currencies. The only way to get credibility and to have people buy our bonds, because if not, we're dead, right? Who's going to pay for all of this? Or we're going to monetize it and create hyperinflation within our own borders, is to have the gold backing. You look at the Genius Act, which basically says that the interest that is created on the treasuries that back the stablecoins, and this goes into effect January, like right around January 1st of next year at the latest, is not transferable. So what has Tether been doing with the interest that they're accumulating on these stablecoins and the treasuries that are up to 90-day treasuries that are one-to-one linked to the stablecoin? They're buying gold with it. They have 14 billion in gold already, the single largest stockpile in the world next to central banks. What does that do? That devalues the dollar. And that's what they want to do, to sell products to the world. And if they peg it to the back end of the bond market and use anytime money moves after this is implemented, anytime, it creates synthetic demand for the front end of the curve. Up to 90 days will back the movement of money. The stable coin rides on the rails of the blockchain and is backed one-to-one with short-term 90-day or less treasuries, which the interest is not transferable to the holder of the stable coin. When I send you money, a stable coin is created. It's backed by a treasury. When you get it, stable coin is burned. That treasury interest, that stays with the issuer. So that issuer then has to do something with it. They've been buying gold, which is my theory, which is why you will see gold go higher, the dollar go lower, in an effort to bring back manufacturing and sell it to the world. But how do you bring it back? Well, you create zero coupon bonds back to gold. And as the price goes higher and higher and higher over the duration of the bond, and when you finally have to deliver the gold at maturity, gold is way higher than when you sold it. And it's just a fraction of the ounces. This gives you a chance maybe to grow yourself out of this problem down the road. Otherwise, what do? You inflate or you default like every other government has done before us. I think what President Trump is doing is to have the courage to make the realization that the can has been kicked far enough and we can't keep doing it, or our kids and our grandkids have no future. And that's just the truth.
Well, we have been seeing this de-dollarization trend accelerating for a while now. Central banks now owning more gold than U.S. treasuries. We actually had a few more Nordic pension funds and institutions now de-dollarizing as some kind of pushback to the Trump administration, although they are arguing that it has nothing to do with the Trump's move on Greenland. They're saying that they're divesting from their treasury positions because they want to rethink liquidity and risk management, and that this isn't political, but it's an acknowledgement of rising tensions in Europe. That didn't make the decision harder, but they're trying to say that this is about the US's fiscal position, which, as you and I have discussed, is in an unsustainable level of debt reaching well over 38 trillion now. So we did have the Denmark, the Akademiker pension fund announcing that it's divesting all of its U.S. treasuries. In Sweden, one of the country's largest pension funds, Electa, has cut the majority of its U.S. treasury holdings, selling nearly $9 billion worth of U.S. treasuries. So
let's not forget about Japan, too. You know, they're selling treasuries because they have to bring that money back. And that was the piggy bank to the world for the last 20 years.
But what's interesting, and I want to play the soundbite from the president and link it back to what you've said, that perhaps the United States has been preparing for this under the Trump administration. he who has the gold makes the rules, the golden rule of negotiation. And I think the president may have kind of alluded to that when he was asked about this de-dollarization trend. I think we can play that clip now.
So what should we expect from the European countries? I mean, they've got this EU anti-coercion instrument that would be, you know, services, impacting our services, as you said. And then the Danish pension fund said that they're going to exit U.S. treasuries, $100 million treasuries at the end of December. European countries hold trillions of stocks and bonds from the U.S. Do you worry that they would start selling those in retaliation?
If they do, they do. But, you know, if that would happen, there would be a big retaliation on our part. And we have all the cards.
We have all the cards. What do you make of that, Andy?
Yeah, I mean, I think you're right. He who has the gold makes the rules. And I think he is preparing for that. And I think there is nobility in what he is doing. I do. Honestly, I do. You know, everything he's talking about has gold in it, even the Golden Dome. It was called the Iron Dome, I thought. Now it's the Golden Dome. He keeps making these comments about it. And I think there is a realization that gold is going to be rewired or reworked into the system. I think he understands that. I honestly believe that he got together with the, now, again, I could be naive. Maybe I'm wrong, but it just seems too coincidental that, you know, when he comes into office, before he even takes office, when he wins the election, all this gold starts coming back. And I think they got together with the banks and said, you idiots are so far short, it is an existential threat, and the rest of the world is buying it. So here's what we're going to do. We're going to tell everyone this is about tariffs, and your collusion that you've been doing for the last 30 years, you and the European banks and the banks in Canada, to maintain dollar supremacy, bond market supremacy, and to keep silver cheap for the military. Well, we're going to say that has to, you got to just send the bars back. Don't worry, it's a one-way tariff. This will end. You got to send it back. We got to cover, and we're going to reshore it. And it is not going to go back. And they've been bringing all this gold and silver back to the tune of billions and billions and billions and billions and billions of dollars worth every month, because he sees what's happening. And they understand that the global south is already ahead of us in reintegrating gold into the system. And we have to do it as well. And I think the same thing is true about silver. And that is why you saw all of these imports.
Right.
And ironically, they classify it critical.
Well, you mentioned Ray Dalio earlier, the founder of Bridgewater, and he's been very explicit about what he believes is happening beneath the surface with regards to the monetary order breaking down, echoing a lot of your theories and ideas. And to me, it's interesting that, again, this conversation is now being trickled into the mainstream, the idea that we are on the verge of a potential change in the global monetary order. And this is one of the conversations happening on the sidelines of Davos. Let's take a listen to that.
The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. Let's just take a moment on that capital war issue, okay? We know that both the holders of U.S. dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy U.S. debt and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
I mean, he's basically saying what you're saying, not mincing his words there either. Does the fact that this is out there now signal to you that this shift perhaps is further along than we think?
Yeah, but it's out there, but it's not. How many people watch us?
Only the smart ones.
Well, you're right, but go and try, and talk to 10 of your oldest friends about gold and silver for 30 seconds. And yeah, they may say, yeah, I see it's been going up, but that's it. You see nothing, you hear nothing. When Reuters talks about silver's run, just like TD Bank, they call it the devil's metal. And I mean, everything is in a negative light. It's overbought, it's peaked. It's just like 2011. It's just like 1980. I mean, and I think it's just completely been ignored. Now, as he points out, the S&P, not only did it underperform European, it wickedly underperformed gold and silver. And this in the face of a 19% gain or so, 16, 17, 18, 19% gain in the S&P in the face of the greatest tech boom ever with AI, NVIDIA and whatnot. And gold is up 70% and silver 150%, and not a flippin' word by the mainstream. And even more importantly, if they would have followed that trail, they would have led them to the COMEX. Who the hell's doing this? Who's doing it every month? Who's standing for delivery? Who's spending billions and billions and billions of dollars? Where is the journalistic integrity? Ray Dalio, I give him credit. He's a mainstream guy who has the courage to say what he feels, even though he may not really be saying it like he wants to, but he gets it. And he's been talking about gold for a long time.
But Andy, on that note, you talk about the journalistic integrity. Can you actually obtain the records of who is standing for delivery? I mean, I know there's
no, but rules. You can see the delivery records. You can see the amount of gold and silver coming into the COMEX, which is as unusual as.
But how opaque is the actual COMEX in terms of, is there an ability to actually follow some kind of paper trail? Like, we know that there's certain SEC regulations with insider sales filings that eventually these things have to come out, that there is some level of transparency. With regards to the transparency of the COMEX, I mean, someone knows where these things are going, surely.
Well, and the fact that no one's talking about it, but a guy like me trying to figure it out, I mean, that's the point. It doesn't matter who's buying it. The fact that someone is, or someone's are, is all that matters. And when you see at that level, I would argue, when you're spending hundreds of billions of dollars, and it never really has happened before ever to this degree. I mean, sure, we've been net exporters of gold for most of my career, 36 years. Now we're maybe the largest importer. And you just see massive imports coming in. The question should be asked, who's doing this? Why all of a sudden? It's really very unusual. And that to me is the most important part, because at that level of money and wealth, they know the playbook. Their information is worth more than the money they use to buy the stuff with, which is worth more. The stuff they buy is worth more than the money used to buy it. So, information is at the top, and what they're buying using the money that they're using to buy it, or the currency, I would argue is very smart. And to Ray's point about, or to your point also about, all these companies or countries or pension funds or whatever moving away from dollar. Why would anyone want to hold a dollar? The measuring stick by which we measure the dollar, the Dixie, the dollar index, is flawed, because all of these countries are constantly devaluing their currency against ours. That's just the way it works. And whether it be to sell exports, or because you have to go into the open market at some point to buy more dollars to transact global business, unless you hold a huge stock of them or stash of them, reserve of them, that means you're holding our treasuries too. Both are a sucker's game. So you look at a dollar index that says the dollar was down 9% this year. Okay, how about against silver? 150, gold 70 or 80. Point of it is that why would anyone want to hold our dollars? They have the lasting power of a melting ice cube. And why would anyone want to hold our treasuries? Not only have they performed horribly, half the performance of the 10-year treasury for 25 years. Look at the last 2 years. Gold up 40% in 2024. 2024, the 10-year treasury up 4.5%, 5%. Okay. How about last year? 10-year treasury up 4%, gold up 70 or 80%. Keep on going. But it has no counterparty risk. So these things are very, very obvious if you look close enough, and Ray's saying it. And that's what the pensions are saying. No, it's not about Trump. I believe it's not about his policy. It's about the fact that we have ridiculous fiscal irresponsibility. and that we are selling and so much debt. We're going into $1 trillion of debt still at the clip of 100 days per trillion. And, that's not sustainable at some point. Now, people point to Japan and say, well, they're 300% debt to GDP. Yeah, but they have the largest savings in the world. They have a net surplus in trade. Everyone buys from them. And the Bank of Japan owns most of it, but they're not the reserve currency. We are. And that's going to have a problem. Now, you pull all this money out from the yen carry trade, the reverse yen carry trade will be just as disastrous as it was bullish. Now, it hasn't crippled it yet, but the Japanese bond market is breaking and rates are going higher, which that means you will see more capital, including that, rumor has it, of Warren Buffett, who has been sitting on the sidelines with $400 billion in cash, is now deploying money in Japan, so I hear, because he sees opportunity there. So I guess my point is that recency bias, normalcy bias, all of these things that the mainstream points to and the media neglects, to me, are very clear and easy. Who's doing it? That's unusual to the nth degree, and that's all you need to know, because at that level, information is key, and they know it. They know where it's going, and it's followed the central bank path for the last 5 years. You can see it. Central banks led the way because they write the book. The folks here in the U.S., well, they're part of that book too.
And it looks as though they're continuing to be writing the same chapters in that book as this trend only continues and accelerates. And, for me, the whole point of the Davos World Economic Forum acknowledgement on some level that this global monetary order is shifting, is cracking, something that, as I said, you have discussed for a long time now, but we're seeing it play out. And that is why I think we're seeing the Trump administration encircle its perimeter, consolidate power, as you've discussed, be more sovereign, onshore manufacturing, start to bolster forces from a military perspective, start to consolidate, as per the Monroe Doctrine, presence in the Western Hemisphere, because this multipolar fracturing is arguably inevitable. So, and not because of the Trump administration, this has been going on obviously for years, but in preparation for that, try and consolidate accordingly. And I think the fact that, as I said, this is becoming a topic, granted, not as out there as you would like, or that you would think should be merited, but it is starting to seep into the conversation, only further consolidates that idea. So, Andy, as we wrap up here, I mean, obviously we can discuss the details and so many theories and strings to pull on this, but as we wrap up for this particular conversation, we've got silver pushing 100 nearly. I mean, I think you said you expect silver at 100 by the end of January, and I know you don't typically like to give price forecasts, but that is where we're heading. And a gold almost not that far off from 5,000. Some people are saying, should we be selling? Should we be swapping silver into gold? What is your perspective on how you're playing the metals positions right now?
Well, we're getting close to that moment where you can start thinking about swapping your silver to gold. We're at about a 50-to-1 ratio. I started telling people about that when it was 100-to-1 in March of 2020, and it's stayed. I guess it stayed irrational longer than a lot of people really like, but it's starting to move back to where it should be. And I think if you bought in 2020, you could start by maybe like layers of an onion, peeling some off and trading some silver to gold right now. But again, the argument against it is that it's an asset that is finally maybe going to find global price discovery after never being allowed to do so. And how low does it go? I guess we shall see. I don't know exactly how low the ratio goes, but I would start looking at it very seriously right now with some. And as we get into the 40s and below, then yeah, you continue to do it. Granted, it's coming out of the ground at 7-to-1, and it is now seemingly trying to price discovery. As far as the price goes, we talked about it, and I said months ago, like, if you take technical analysis, again, in a rigged market, how valid is it? in terms of where it stops. But I did say publicly that I think 96 is easy, because you take the top of the cup in 1980, the bottom of the cup in the early 90s, that's $4. The difference is 46. When it finally makes the top of the cup and then the handle back above 50, you add that to the top, that's 96. This is where the breakout, anyone using technical analysis would say we are. This is why you're getting all the, well, it's, technically you might want to sell it, but I don't think so, because now it's national security. Now the government's buying it. Now there's a floor underneath it. Now it's being drained from the exchanges. Now we are beginning to see, through delivery by very sophisticated people all around the world, not just in North America, but in India and in China and so in Saudi Arabia and Russia, they're all saying, haha, this is what we're going to do. We're just going to gobble it all up. It's a race to get it. Where does it stop? I think a lot higher than people think. Michael Oliver, who uses momentum analysis, says 200-300. Wouldn't surprise me. I mean, I guess it wouldn't. I guess we'll see. I don't buy it to become wealthy. I buy it because it is wealth. You're beginning to see that play out again and finally accentuate itself after being held down for literally decades by the West. Now all of a sudden it's trying to find what its real price, and I think it'll go much higher. If you told me it would hit $200 this year, I wouldn't be surprised. I'm not saying that's where it's going, but it wouldn't shock me at all. And look, if you take gold right now, which is at let me see, roughly 49.40, and divide it by 7, which is the geologic ratio, its real ratio. I'm not saying it's going to get there, but 49.40 divided by 7 is $705 an ounce. All right, so 705 versus where we are. If you
Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel, and silver has just hit a few cents below $100 per ounce. Specifically in the overnight hours leading into January 23rd, silver hit $99.22. So we are within a hair of $100. And we're going to talk about what is next for silver, what is next for the precious metals. This has been an outstanding run. Some might say that this is a once-in-a-lifetime run that is going on right now. We're going to look at what is coming next for silver in this video. It is January 23rd, 2026. I want to let you know that this weekend coming up, in fact, this Monday, I'm going to be speaking live twice. They've just added a second session at the Vancouver Resource Investment Conference. That's in Vancouver, British Columbia. I'll be speaking this Monday at 1:40 p.m. in the afternoon. The title of that is The Fourth Turning for Gold and How High for Silver. I'll be giving a preview of how high for silver right here, right now. And then at 2:20, just 40 minutes later, I'll be speaking at Workshop 4. This is a fireside chat with Adam Barata, and this will be a group discussion on the precious metals. So if you're going to be in Vancouver, remember the conference is free to attend. There are going to be people there. This is one of the largest conferences in North America and the mining side of the industry. So if you're going to be there, make sure to attend my talks. Come by and say hi. I would love to say hi to you. It's wonderful to get to know people at these conferences. So I look forward to that. Let's get into what's happening here with silver. If you have 1 second to give this video a thumbs up, I really appreciate it. It does help the algorithms here on YouTube. Make sure to subscribe as well. Follow us on X at iGlobalGold for free updates throughout the week. Let us look at silver here. This is the view from what? From the big breakout right here, the last week in November of last year, that is just 2 months ago, the big break above what? $50 per ounce right here. And before we get into the forecast, we just have to take a step back here and acknowledge the fact that silver has risen by twofold. Silver has doubled in 2 months. This is a once-in-a-lifetime opportunity for many investors. The last time that a move like this has happened was late 1978 into 1979. So there are a few investors who participated back then, nearly 50 years ago. But for the majority of us, this is literally a once-in-a-lifetime move, and I don't think it's over. So let's talk about what is going to be coming here. We're looking at the short-term perspective. As long as you can remember that the big move for silver was when it broke above 50. That was the former 1980 and 2011 peak. So it broke above that. It's doubled in 2 months. Now let's look at this is a new all-time high. As I said, $99.22 hit just a few moments before I published this chart. New all-time high. Let's talk about what is coming here. When we go back from the start of the breakout here above 50 in late November, we can see what? A very, very clear, very well-defined, look at this. Look at the number of hits on this trend here. I mean, we're talking 7 or 8 hits on this lower trend. So it's very clear to see where the buyers are stepping in every several weeks, right? We can see that. I mean, we can talk about all the reasons why the buyers are stepping in. Gold is expensive for a lot of people, so a lot of people are looking at silver as a better bargain. Of course, we have the industrial demand for silver still sopping up 80% of the demand every year. So there's not that much physical silver left for people to buy. We have China. We have some of the Asian countries that are starting to look at silver as a better bargain, right? But for whatever the reasons, all of the reasons, we can see where those buyers are showing up now. We can see them. We can literally see their footprints here coming in every several weeks. This is what we do with price analysis. We look at where the buyers are stepping in, and then what? We can see, isn't this incredible? We can see where the sellers are showing up. And isn't it incredible that they're basically showing up on a parallel channel to the buyers here from the last couple months? So there is a very clearly defined pattern that silver has been following now for the last 2 months, is doubling since it broke above 50. And the really interesting thing, there's also a little mini short-term rising channel in there. We can see that. So if I was to define the present boundaries of the pattern that silver is in, it's this sort of, gently sloping rising channel. I mean, in the big picture of things, this is not a gentle slope. Doubling in 2 months is not gentle. But when we zoom it in here to the short run, it's a rather modest sloping channel that we see here for silver. So that's healthy to see. Now, with silver getting to 99.22, let's call it 100. I mean, just a hair below 100. My bias, my best case scenario, my highest probability scenario, I should say, would be that silver is going to back off here from 99, 100, the most recent resistance, but stay what? Within the boundary of the presently defined rising channel. We can very clearly see that silver has taken on this new rising channel, right? And so then we'd be talking about breaking above 100 when we get into early February, and we would keep going higher from there. That's the way that the market looks presently. I do want to say, though, however, silver is acting more bullish when my premium subscribers and my individual clients ask me about my take on silver right now. What I'm telling them is that in the last 2 months here that silver has doubled, it is acting more bullish than any of our statistical models going back for the last 45 years. When we compare how copper performed when it broke out of its 1980 peak, when we compare how oil performed when it broke out from its 1980 peak, when we compare how platinum performed when it broke out from its 1980 peak. Palladium, gold, natural gas, all of them. When we compare how all the commodities performed after they broke out of their 1980 peaks, silver is behaving more bullish than any of the other models that we have available to us. And because of that, even though I'm going to stick with the visible boundaries here for price behavior until the market shows us otherwise, I would tell you that there is a reasonable chance here that within the coming 1 to 2 days, perhaps early next week, that silver is actually going to break above 100. I think there are a lot of people suspecting that that around 100, silver is going to back off significantly. And this market is behaving more bullishly than any of the statistical models that we have available for any other commodity. So it might be getting ready to fool the majority here and break upward from this visible resistance at 9,900 and then consolidate on the upward side of this pattern in that type of fashion, let's say for another 2 to 3 weeks, before what? Actually, as difficult as this is to believe, actually aggressively rising higher at that point. Not staying in the more shallow rising channel, but actually more aggressively rising than even it has been here over the last 2 months. And that is going to lead us to our next set of targets, which I'll discuss in the future, which are going to include 150 and quite likely significantly higher than that. So I see a lot of investors right now who are, there were a lot of investors at 65, 75, 85 saying that's it, silver is going vertical, it's too much, it's too far, and they sold. And now silver is up here at 100. And what I'm telling investors is that even if you sold too early, this market is likely going several orders of magnitude higher over the coming handful of years. We're talking 2 to 5 years. And so it is not too late to get back into this market, whether you're talking about physical silver or whether you're talking about the silver mining companies. And there are some of the silver mining companies that I know of that are still trading as if silver was $20 or $25 per ounce because the market is overlooking them. And those are the mining companies that we are investing in now. So even if you sold too early, I think this market is set to go several orders of magnitude higher still over the coming handful of years. And that is what I'm preparing my clients for right now. So I hope we will get the opportunity to meet in Vancouver, British Columbia, Canada, coming up this weekend, this Monday. It will be great to see you. If you cannot make the conference and you'd like to follow along with all the trades and all the investments that we are making here, all the mining companies, all the open market, silver, platinum, palladium, gold, options trades, everything, the service for you is called Precious Metals Intelligence Plus. So I hope you will consider joining us. If I'm right about how this is going to play out, many of my subscribers will be retiring and never have to work again a day in their lives 3 years from now. If you are a higher net worth investor, you have to understand the power of private placements. In these private placements, we receive free warrants with every single investment that we are making, and that gets us nearly twice as much upside compared to buying mining companies in the open market like we do in Precious Metals Intelligence Plus. You will still make a killing by buying the mining companies in the open market, but you're going to be making nearly twice as much if you participate with us in the private placements. And remember, you will receive a free subscription to Precious Metals Intelligence Plus if you join us in the Elite Private Placement service. If you would like to sit down with myself, Christopher Aaron, one-on-one and discuss your situation, your holdings in physical silver, your holdings in gold, your holdings in platinum or palladium, your mining companies, the companies that you're thinking about investing in, all of the above. Remember, I am 100% independent. I do not take any fees or any kickbacks whatsoever. Not a single penny from any of the companies that I talk about, any of the companies that I refer clients to. I am 100% dedicated to assisting individual investors because that's how I approach this market. I myself am an investor in this sector. I've learned how to navigate this sector, the ups and the downs, the ins and the outs, how to not get taken advantage of, how to double your upside on certain investments. And so I approach this from this independent standpoint of looking out for individuals in the best manner that I'm capable of. So I hope you will join us one way or another. I hope to meet you in Vancouver, British Columbia. Join us. This is a once-in-a-lifetime move for most investors that is happening in silver. And we haven't even talked about gold in this update, but it's happening for all the precious metals. Do not miss this.
Silver, $30, $40, $50, $60, $70, $80, $90. And now they're just hearing that. And so in turn, it's the hype for them as a
surfer. Like become your best friend. Balances in your bank instead. What's up, everybody? This is Stacking Surfer back with another awesome video, and I'm going to go inside and interview Silver Dave from the local Silver Mint. And I'm excited to go in, guys, so come along, let's go.
Are these silver?
Is that you, Yankee?
That's copper.
Surfer?
Hey, Yankee, how's it going?
Oh, it's going great, man. How you doing?
Doing really well.
Awesome.
Is that Silver Dave?
Yeah.
Yes.
Come on in. Welcome to local Silver Mint.
This is the first time for me meeting Silver Dave, local Silver Mint. So anyway.
Oh, man.
I'm so excited. I've been watching you for months. Actually, I've been watching you for, I think, at least a year. Maybe it's been a couple years now. Time flies by.
Oh, man. Time is flying by so fast. This is wonderful. We have Stacking Surfer right here in the showroom in Ware, New Hampshire. He flew all the way out here to see us and to see Yankee. And guess who's filming us right now? Yankee Stacking is actually filming us. Wow. What a combination of guys we've got here. This is absolutely awesome.
And if you guys stick around until the end, there's going to be a special reveal.
Should we tell them what it is? Or do we have to make them wait? But the main beef and potatoes of what people are buying here is mostly the bullion instruments, such as bars, rounds, coins, eagles, maples, etc. And that's the major staples, and we do have displays for that. So with no further ado, we'll save the bits for last, and we can walk around. So we have, this is Winters Anvil, who's a local silversmith, who also is in the Space Force as his day job, and at nights he likes to make these silver charms and silver statues, and we sell quite a bit of it. It's a great value when you look at the price of it, but of course, it's not a bullion instrument. You're paying more for the artness of it. But these are some fun items. We have some copper. We have sterling swords, which we made.
Okay, wait a second.
Yeah.
Okay, a sterling sword.
Yeah.
I've had a steel sword when I was a kid.
Yep.
A sterling sword.
The sterling sword
Does this
is
work
not
on
for sword fighting.
But does this work on werewolves?
Yes. Actually, it does work on werewolves. But silver inventory. Right now, we actually have a very robust silver inventory. except for silver bits. We're sold out on all the silver bits. And we've sold so many of them. Our guys are cranking as many as they can make. But silver inventory wise, we actually have a very robust inventory of eagles and maples and 1 ounce, 5 ounce, 10 ounce, 100 ounce, 50 ounce, kilo, etc. bars of silver. But I know I said silver inventory, pretty good, except for silver bits and 1 ounce gold. We're out of 1 ounce gold. Now, the best way I can explain this is that we had a whale customer who's done a couple deals with us, but every deal he does is big 6-figure deals. And so he bought all the 1 ounce gold that we had.
Wow.
And I shouldn't say, I kind of want to. I shouldn't say what the dollar amount was. Let's say that it was almost 7 figures, and we have no ounce gold now. We've had a lot of volume of customers, but that the customers have also been doing big deals. Every day we have multiple 6-figure deals occurring. So it's been huge, the way that people are buying.
So I'm hearing this. I'm hearing from online bullion dealers too, that there's massive purchases coming in. Something seems different than what we've seen the last year. Are you starting to see these orders be bigger?
Yes, and I think there's a reason for it.
Okay.
So first, we are seeing bigger orders.
Okay.
Guys are throwing in really hard. But also what we're seeing is a lot of new silver stackers. So the regular people, the normies, I sometimes call them, the normies weren't thinking about silver. It was fringe guys like us and gals that were thinking about silver. Yeah. And we've been thinking about silver for decades in some cases. Yankee's been thinking about silver since 1920s or 30s. And Tim
1800s.
Tim was in the Civil War and he was collecting silver.
I like to call us early adopters. I'm a marketing guy, so I like to say early adopters. And every time you look at any kind of a trend, it always follows a bell curve. So we've been these early adopters at the beginning here. We're still just barely starting to go up that curve. We are nowhere near the top. And, you know, to your point, I'm seeing bigger purchases. I'm hearing of a lot of people starting to get in. And so we hear this term mania. Are we in a mania? Are we in FOMO? Or is it maybe mania and FOMO for like the early adopters? Or are you seeing just a lot more new people coming in than, you know, the people you normally see to come in and buy?
Yes. So to answer that question is that because the people that were fringe like us, we were stacking silver and we knew the data points. We were studying the ratios and the use cases and supply. But the normies, they're not thinking about that. What they see is that they're hearing on the news, silver, $30, $40, $50, $60, $70, $80, $90. And now they're just hearing that. And so in turn, it's the hype for them as opposed to the data.
That makes sense.
They're seeing that it's going up. So now I would say some degree that is FOMO or some degree it is frenzy and mania. And so that's where I think that a lot of the new buyers, they have this chunk of money that they're shifting from a stock or shifting from a CD or other things, and they're putting it into silver. The silver stackers that have been stacking for 10 years, they would spend their money on silver already. So they didn't have $300,000 to throw into silver at that moment, because every time they had an extra $5,000 or $10,000, they would buy more silver. So these new people, they're like, oh my gosh, silver.
I got to do it now.
I got to do it now. So they sell off their CD or they cash it out. They sell off a barn. They sell their stock portfolio and they buying the silver, and they're buying big. And that's part of why I think we're seeing a lot of these big orders.
That makes sense.
Also because people are just seeing all this action. They see it's going up and up and up, and they don't want to miss the opportunity.
And so to your point, I think we've had early adopters gone. It's already past that. And then what people wait for is they wait for a trend and they wait for confirmation of the trend. That's what we've had. So now you have the smart money coming in. And smart money already has money because they're smart. And so they start coming in with 6-figure buys. They start coming in with 7-figure buys. And then what ends up happening is the rest of us stackers that are coming in for our regular buys are getting whiplash. The price keeps going up. We may have a hard time finding products. So I'm glad to hear you have ample product. You know, what is good to stack right now? You mentioned all of the different products you have. I've got some people right now that are freaking out that they have 100-ounce bars. They need to hurry and sell those. They want to get into something smaller, more fractional than that. I've got other people that are going heavy away from 1-ounce coins into fractional gold as well. And one of the things I like about that is when we get to higher prices, it's easier to sell the fractional versus the big bars and also the 1-ounce gold coins. It doesn't mean that they're not good. It just means that you're selling, you know, a higher fiat dollar value or trading for it. 100-ounce bars, though, this is what concerns me. When we get to that $100 mark, we're now talking over $10,000 for a bar. So if I want to sell one or if I want to buy one, cash becomes a problem.
Yep. So that is, we have been seeing an influx of people trading 100-ounce bars for smaller things, including silver bits. People can send us a 100-ounce bar and we can give them 900 silver bits, for example, in trade for it. So trading out and getting into smaller pieces that's more spendable. But just to speak to what you said, $10,000 or more, tax form. So if you have 100-ounce bars, once the silver price goes over $100, it's $10,000 at a chunk. So, you know, it takes away a little flexibility. If you go to a shop and now they have to do a tax form or they have to pay you with a check instead of cash, you have less flexibility to how you maneuver things.
Yeah.
Obviously, you want to follow all the rules and ask your accountant for tax advice, but you have less flexibility with that big hunk. So that's, to me, one reason why I'm less into 100-ounce bars. Now, there's a caveat to that. If you're stacking pallets and pallets and pallets of silver, 100-ounce bars are a little easier to count.
Well, and you can get more silver in a smaller space. So there is a place for 100-ounce bars. We're not totally, you know, crushing 100-ounce bars here. But if you only have 100-ounce bars or kilos, now's a good time to maybe do something different.
Okay, so a little bit of tour of Italy here. We have fractional gold in terms of 1 gram, 2.5 gram, 5 gram, 10 gram, Swiss francs, French francs, gold sovereigns, etc. Note, this is just our display. If you buy it, we take it from the back and we box it up for you. So this is not our inventory right here. We have Morgan and Peace dollars. These particular ones are ones that are rare. So you'll see they have special pricing over spot. We also have bags and bags and boxes of what we might just call common Morgan and Peace dollars that you buy for a bullion as opposed to a numismatic value. Over here we have silver eagles, we have Canadian maples, and then we have these half-ounce polar bear maples, which are a little bit more divisible than the 1 ounce, and divisibility is going to be key. But before we go into divisibility more, we're going to keep going down the line. Premium coins, such as Britannia, Philharmonic, Australian kangaroos, etc. These are just samples that we have in the case. But if a guy says, oh, I'd like 100 of these and 100 of those, we just take it from the back and we dish it out to him. And so with that, as we carry on down the line here, we have 90% silver, dimes, quarters, and halves. Okay. We actually have a boatload of them right now. We have a mountain of 90% silver. Now, the good thing is that, and also note there's Morgan and Peace dollars in there, common ones. Now, the 90% silver, what's good about it is it's divisible. Also, a lot of that it's divisible and it's very affordable price-wise right now. Those are some good things about it. However, there's some negative things too. And one of the negatives that a lot of people are observing is that because it's 90% silver, it takes a lot more work to refine it. We're just because it's even lower purity than sterling, the refineries have to do a lot more work to purify it if they do so. So there's a lot less market for the 90%. A lot of new people, they want pure silver. They don't want 90%, and they want something that's marked, that clearly says what it is and what it weighs. So the downside to the 90% is that it's not marked with a purity or a weight. The upside is that we have it in stock, which we're out of silver bits. And we'll talk about that in a moment. But Here we have 1 ounce rounds, 1 ounce bars. Super popular, and it's a great balance point between divisibility and price. 5 ounce bars, 10 ounce bars, 100 ounce bars. Samples in the case, we sell it from the back. Here we have some more 1 ounce rounds, but here it's a little different category. We have mixed design silver rounds, but that are in new or like new condition. And then we have mixed design varying condition. And that's the cheapest because they're tarnished, they're mixed design, they're snowman, they're Merry Christmas 2023. But you can get that low price per ounce. That's a great configuration, and we sell that. And then we have 1/10 ounce silver rounds, as well as gram silver, 1/2 ounce silver, and we have our old Gen 3 barter bags from about 4 years ago that are made of sterling silver. At the time, that's what we were using. Later on, we found out that people really didn't like the sterling, even though, I don't know if you've heard of Milton Friedman, but Milton Friedman's son, his name is David Friedman, and David Friedman screamed and yelled at me for using pure silver in 1/10 ounce back in 2016, and he was like, "You can't use pure silver in a coin. It'll wear down. This is the worst idea. You should be ashamed of yourself. This is a horrible idea. You're gonna find out." And he screamed and yelled at us. So then we made out
So
of
how many of these?
925.
How many of these did he buy from you then?
He didn't buy any. He just yelled at me. So then we switched to 925, and then no one bought them. So then we switched back to pure. We found out the pure actually cost us less to make because it's softer, easier to roll, easier to stamp, easier to cast, and people wanted it more. So barter bags, silver grain.
Okay.
Desperate times call for desperate measures. And so just in case inventory is limited, we have silver grain. We can sell that actually really cheap. But silver grain is tough because if you go to sell it, not everyone's going to trust it. It's harder to test without having to melt it and assay, sample the pot. Silver card fits in your wallet just like a credit card and cuts with scissors for infinite divisibility. The silver card is actually my invention from 2015. However, we don't make it anymore because we sold it to Pyromet, but you can still get it from most of the online dealers.
I actually have one of these.
Is it in your wallet right now?
No.
Mine is.
I do have one.
Mine is in my wallet right now, yeah.
I actually don't know where mine is, but it's in a safe somewhere.
Since 2011, my big focus with this operation was I was really fixated not just on silver, but silver you could spend.
Okay.
My vision was that you didn't just want to own silver to make dollars. You wanted to own silver so you could still buy stuff, regardless of the condition of the financial system or internet access. And so I found that 10-ounce bars were not good to buy basic essentials. And my vision was that if there come a financial calamity of some sort, we have made millions of 1/10 ounce silver bars and rounds over the years and sold them. Now we are at silver bits. And silver bits is our newest 1/10 ounce product, trademark silver bits, 999 silver. And the idea is that unlike, so if you love the dimes and the quarters, I have a bunch of dimes and quarters in my stack, but not the common man doesn't necessarily know how to identify whether it's a silver dime or not. And it doesn't say the weight and the purity, and it's 90%, so it's hard to introduce to industry. Silver bits clearly say 999 silver on them and 1/10 troy ounce. So it's very easy for a person to distinguish what it is. And now that the silver price is almost $100 an ounce, now it makes it even more important to have that divisibility. And if the silver price goes up even higher, then it makes even more sense to have that divisibility. And that's the point of silver bits, to spend them, to use them. And we wanted to blend a dollar inflation hedge with a barter tool. So we've geared our pricing down. And sometimes people will criticize the price of silver bits when compared to 10-ounce bars. But you got to consider that it is not the same product. It costs a lot more to make 100 little coins than it does to make one big bar. So you will typically pay more for fractional silver. But you'll notice that our silver bits are less than the price of American Silver Eagle per ounce, and I would suggest 10 times better for barter and trade, but it's lower than the price of any other 1/10 ounce silver. Our silver bits come in at around $9.75 right now. The competitor 1/10 ounce rounds are around $12 to $15 each.
Be able to pre-order
we're
it.
pre-selling them right now, and though we are telling people February 1st, it does look like in about a few days our production will have caught up to the orders from because during the vacation it was selling on the website, and our website was really simplistic and it's doing massive volume anyway, but the guys weren't producing, so they're catching up. So if someone wanted to place an order for silver bits,
I would like to.
I would love that. I want you to have silver bits in your hand. So with that being said, they place an order, we'll send it to you when it's ready, or you come back and pick it up if you're a local guy and that's what you want to do. And I'll just throw one more piece in there, and that is that right now we're currently making the stamped silver bits. But if you didn't know, we have our new factory coming online soon, and we got 4 coin presses that used to belong to the U.S. Mint, making billions, with a B, billions of dimes. We've got them now, and we got an operator that I don't know if I should even open this can of worms now. Oh, no. Jeez, because I think we talked about this. I should say it. Okay, so we also have a newspaper article, and the newspaper article is from the 1980s, 1986, and it shows a particular guy and a particular coin press making the first American Silver Eagle coins.
What?
Now, well, wait, let me tell you the rest of this. So in this newspaper article, we see this guy and we see this press making the first American Silver Eagle coins. And well, that press in the picture, that's ours now. The one that made the first American Silver Eagle coins, we own that press along with 3 others. And the guy that's in the picture making those coins,
oh my gosh,
he also joined us. The guy who made the first American Silver Eagle coins and the press that he used joined our team. We met this guy in Las Vegas, and he just loved what we were doing so much. He's 65. He just retired from minting, and he was doing it his whole life. And he heard about what we're doing, and he's like, he's selling his house. He's moving to New Hampshire just so that he can run and teach us the coin press operations, because running the coin press is a little bit more complex than just stamping. So with that, have those resources, and soon we will have a coined silver bits product, making these a limited collector item in the future.
We interviewed Bill Holter, and we had a great interview. And, you know, he kept telling me, stop looking at silver in fiat prices. Start looking at it by ounces.
Yep.
And so this goes to what you were just saying. It's no longer about just for silver. It's about what can it trade or barter or buy. And today it has one price, but that price is going to get a lot higher in the future. And what I mean by that is, like, today, depending on where you're at, you might be able to use a dime to buy a dozen eggs. In the future, I think if we're actually using this for barter, you might be able to buy 2 dozen eggs. Maybe you can buy more with it. How is the best way for them to reach out to you?
I would say call us, 603-529-3999. Or you can email info.
Just cut that down.
Yep. Or you can email info@localsilvermint.com. Or maybe you want to talk to Mike, who's featured in some of our videos, and he's Mike@localsilvermint.com. So you can reach out to us, call us, or email. You can walk into our showroom. We'd love to see you in person. It's a lot of fun. And you get a little more privacy in your transaction when you come in and do the transaction in the store. But, you know, message us. We'd love to hear from you. We'd love to serve the customer. We want to help the customer get in or get out of your silver. If you're going to take some profits, we want to help you so that you get the best rate. We want to serve. It's okay to sell some silver sometimes. If you need a roof job. I save most of my money in silver, though I haven't sold an ounce of my silver in a decade or more. But if I ever needed to pay for some emergency expenditure, then I could potentially, although I have dollar savings too, but I could potentially pull from my silver pile. And if you have to do that, that's okay. Don't feel bad. At least you had the money.
Yeah, well, and gold and silver have done better than any CD that you could have had your money sitting in. And so I think I did a calculation the other day. It's going to take like 15 years of how much you know, earning like 4% on a CD just to keep up with what I did in silver last year. So that is something to think about.
And since 4% is, I would suggest, much less than the rate of the inflation that is occurring,
Yes, you're not actually
basically
making money.
losing money. You're losing money. Stop
You are.
losing money. Unless you hate money. That's okay. Some people hate money.
So how much is in each one of these bags?
10 ounces, 100 silver bits.
Oh, okay. Just got one of those, two of those.
Great.
And we got a bunch of these guys because he looks unhappy. I don't think he wants to be on the 100. I think he wants to be on silver.
Yeah,
That's
he
where
was.
he belongs.
Those silver halves, but times have definitely changed. So we'll get you some real stuff. You got 30 ounces, 300 silver bits, and definitely a good trade.
Awesome. Is that you, Yankee?
Surfer?
Five ounces of gold? That's a lot of gold there.
From a family member.
Hidden in an attic.
Wait, hidden in an attic. So this is the first time you're going to look at them?
Yes, it's never been opened.
If I brought in a 100-ounce gold bar, would you buy that from me?
Yep, that's fine. That's fine.
Two five. Wait a minute, you have two 5-ounce?
And I have one.
You're selling your gold. Do you mind if I ask you why?
I'm selling part of my gold, and it's because I need the money.
We're selling part of it because the price is good right now, and we're building a cottage in Maine.
Awesome. Well, Tim and I were discussing that earlier. We're saying with these all-time high prices, we might see people coming in to sell some gold, but I don't think I've ever seen somebody coming in here to sell 5 ounces of gold Johnson Matthey, and then two 10-ounce silver bars. That's a lot of gold there.
It is, isn't it?
Wow.
So we have dental lab. They closed their lab a couple years ago, but we're still functioning. We buy a lot of gold. So to us, it's like not that big of a deal, right? We buy gold, we sell our scrap when we have scrap, and we're so used to seeing gold that it doesn't have quite the same effect on us.
Wait a minute. This is nothing to you, selling all this gold?
No, it's not nothing.
I know, I'm teasing.
We had a dental laboratory, and dental restorations are made with gold.
Now I get it.
So when we melt it and cast it and all that, so doesn't have quite the same wow factor.
You see gold a lot in your daily work.
Exactly. I'm trying
So,
to
but you don't see it like this, right?
We never see it like that.
Did you buy those bars?
No, they were gifted to us from a family member.
hidden in an attic.
Wait, hidden in an attic.
First they were buried.
1982, so 50.
Wait. Buried or hidden in an attic?
First they were buried.
Okay.
On a 50-acre property, literally buried. And then when they were dug up, they were put in the attic and hid in the attic.
Do you concur with that?
I heard conflicting accounts about the burying part, but
Okay, I don't want to get between you two.
either way, they were stashed. We had an uncle that lived like a miser.
Did you know he had gold?
No, I haven't seen this uncle since I was like 6 months old. I've never met him. When your brain starts computing the numbers, it's like, wow. You know, it was like, I don't know, 100 and... It was a lot.
Do you feel that you had a good understanding of the importance of stacking gold and silver when you found it, or were you just like looking at it from a dollar sign standpoint? I'm going to sell all this stuff.
No, probably not a great understanding. We're just trying to decide what's the best thing to do. Tried to figure out, like, for us, like, is it more of a value to our children to put it into our property in Maine and a cottage in Maine for them and their children?
Or hold it in this
Hold it in this
state, right? So Are you finding this hard to do?
Yes and no. It has been. That's why I've only done a little at a time, because it has been.
There's something there.
Pull.
Do you ever wonder if, I don't know, in another year?
Yes, yes. Or 2 or 3. Yes.
And you know what's happening to our currency.
Yes.
Is this all of it, or is there more?
This is not all of it.
And you're not planning on selling all of it right away,
No,
right?
I am not.
Good for you.
No, I am not.
We have like 2 more 5-ounce bars and 28 Krugerrand, 1-ounce Krugerrand.
28 Krugerrands. Well, did you see the Krugerrands down here? Yeah, the first row on the bottom there is Krugerrands. Eagles, maples, buffaloes. Pretty, huh?
Yeah, they are really pretty. Especially the other side of the Krugerrands. They're gorgeous.
5 ounces. Johnson Matthey.
He said it's not true?
He didn't have to go dig it up, yeah.
Oh.
I don't know where that came from. Maybe he was kidding. You never know with
He
our
might have been
father. He
kidding.
makes stuff
Yeah.
All
Dads
right,
do
girls,
that.
get this story straight.
He said they were in a milk crate in the basement, and that's how some of them got some of these rusty spots on them around the edge.
Oh, the red?
No, ours don't have any rust.
Just from being in a
Don't show 'em
basement in a
That's
milk
on the
crate.
plastic.
It's on the
though.
plastic.
That's on the plastic.
Gold, yeah, gold doesn't rust.
Smelled like mold too. I could smell the rustiness.
So you were just talking about the uncle that had this gold, had a stroke. How did he communicate where this was?
I don't know. I haven't heard that story, but he was able to my dad. He couldn't talk.
It was his brother, our father's brother. Yeah.
But
Wow, so that's a really important piece with generational wealth. When you pass gold and silver on, you got to have it written down or communicated with trusted people. People need to know that you have it.
Before you have a stroke.
because the gold was not documented anywhere, if he hadn't been able to communicate it with my dad when my uncles moved out of an apartment, he didn't even live in his own house. He had it stashed in the attic of his apartment. So whoever moved in after him,
He hadn't communicated it to my father before he died, because he died shortly a year after he had the stroke?
No, it was about 8 years.
Oh, really?
Yeah.
Well, it could have been bad. It could have been a really
Because
troubling
it wasn't
situation.
written anywhere, put in a will or anything. That's why I brought these also, just in case Tim did not want another one of these.
Just in case you
Or
didn't want to
can't
buy
move
it.
another one of
Is there
them.
anything
I'm
you
a sucker
won't?
for anything gold, you know.
You're a sucker for the women too. If they come in, you're going to buy from them. I know you, Tim.
They're always fun, but they can never get their story straight.
No, that's very true. Well, I think our father is kind of, he doesn't like to give straight stories, so he could have told her one thing and told me another thing. That would be very like him to do that.
A couple gentlemen over here. Do you claim these two?
No, we have nothing to do with
You
it.
have
They're our bodyguards.
They're bodyguards. Yes, that's smart.
25
Nice to meet you.
25 ounces.
Is there any size gold? If I brought in a 100-ounce gold bar, I wish, would you buy that from me?
Probably not.
No, okay, fine. No, if it wasn't me, if it was somebody, if it was like this lady right here, if she brought in a 100-ounce gold bar.
Well, that changes everything.
What's the biggest?
I think the ones on the Comex are 400 ounces, aren't they?
Yes.
Yeah.
Where are those again?
On the Comex, the Commodities Exchange.
Are they really?
Yeah, they're pretty big.
They're massive because nations stack gold, right? So they put their wealth into it. They want large bars, right, to handle billions.
Makes sense, right?
I once saw one, I won't tell you which financial network it is, and the woman said, yes, this is a 400-ounce gold bar. Of course, it was a 40-ounce bar.
Oh, that's funny. All right, so what we were curious about is if there's a difference in the amount that you pay per ounce for a 5-ounce bar versus the Krugerrands. I didn't open these, but
No,
I should.
actually, it's pretty much the same.
This came in a homemade pine box that my father-in-law made.
He cut down a tree, he bored a hole in it,
A bunch of holes for
put
different
these
ones.
in it.
I still have the last tube. There's no. I
You
couldn't
do? Really?
clean it up. It
Oh,
wouldn't clean
yeah,
up.
that's-
It had so much tape residue on it, it just wouldn't clean up.
So this is the first time you're going to
I
look
heard
at them?
that story too. And,
Yeah.
This particular tube.
This, this
He
one.
said no.
This-
That
Yeah,
his,
it's never been
their
opened.
Uncle
This is
John
probably-
put it in his attic.
this is probably
Once
like
he
a
started
50-year-old
accumulating,
water
He had a
paper towel.
secret spot up there, buried underneath insulation.
These have
Yeah.
never, as far as I
It
know,
sounds like a safe place.
ever been taken out of this tube.
Okay, so
Since
how
he
many
bought 'em.
did you want to sell of all this stuff?
Depends on how much you're going to give us
10.
for 'em.
We'd like to keep 4 of these.
You can't part with all of them.
But we have more.
Oh,
But
goodness.
Just wanna. We just had a amount. We thought we'd sell 15 ounces.
Yeah.
Basically. So do you have to put the amount? No, I guess.
No,
What's that?
I take care of the rest of it.
Something someone brought in today?
Well, Tim, that's a good question. What is the silver that we have
On the side.
on the edge here? All these bars and rounds. Did you pick those up from someone and selling them?
No, they're actually an accumulation that the guy who called about them usually buys the oddest ones he can find.
Those are beautiful.
I know. Happy birthday.
Yeah. Be a great gift.
Father's Day.
And this
It's
one
interesting how these,
Happy
these have a
Valentine's
reddish
Day.
tint to them.
Yeah.
And this is so
yeah.
cool.
What are you going to do with the rest of the gold, or what have you thought about doing with the rest of the gold?
Well, most of it's in a very, very special hiding place.
Smart.
But
You're going to reveal that now on this channel, right?
yeah, I'll tell you exactly where it is. We gave 7 ounces each to our children, our 2 kids.
Oh, that's wonderful. What a blessing to them. Do they know what they received, really?
Yeah, they do, and they're smarter than us because they're hanging on to it, and they don't want to cash it in just yet. So
You got to be proud of them.
Yeah.
Really?
We're proud of them.
pretty proud.
You know, we're getting older and we've got dreams that we want to fulfill. So they're young.
And also,
and-
they're going to need to take care of us very soon,
Yeah.
so they're going to need the money for that. We've gotten some help along the way through our lives, and we just want to be able to pass it along to them, help them out a little bit too.
Before we acquired all this gold, it hasn't changed our personal happiness at all.
Yes,
So
it has. I'm so much happier now. Yeah.
it's a little bit more of a financially, okay, you know, this is cool. But, you know, you can be really miserable and have.
You're just happy.
Yeah. Who wouldn't be, right?
Never got married and never had kids, so kind of begs the question, like, who was he saving it for? Or maybe he thought that the economy was going to collapse, you know, a long time ago. And
Would you have ever thought to buy gold or silver prior to this?
no,
We don't make smart decisions like buy gold and hang on to it. We lose all our retirement in the stock market.
That's awesome. Oh, man. But now, do you see the value in it?
Oh yeah, absolutely. I mean, and we're totally aware of the uniqueness of this story and how it could have ended up so different. Somehow, his brother, their father, was able to understand what he was saying somehow and lead and find it up in that attic, which is incredible. I mean, who gets gifted this? Like this kind of thing doesn't happen to many people. So
it is very true.
We're very fortunate.
In fact, I'm going to say right now, if there's anyone that's watching this this has happened to, please put it in the comments below. I'd be curious to read about it.
Yeah.
we have a bunch of wheat pennies.
You buy wheat pennies too, Tim?
No, but that's stacking. In a way, that's stacking.
Well, we would suggest to go over to your grandparents' house, get a ladder, get up in their attic, tear out all the insulation.
No, don't do this. I'm going to have a ball editing this.
How many times do you do put a channel up, put an episode of your channel up?
I try to do at least one Tim video a week. That's my goal.
Really?
Tim, thank you. You're such a pain in the ass.
Come on, buddy. Throw me a like and subscribe right now.
Listen,
He's counting our money.
All I can
Get
say
that
is, if
camera
you're
out of
not
here.
subscribing to this channel, you're missing a lot.
Thanks, man. I appreciate it.
You're not gonna like my price today on that. I don't know, man. Give me a number.
I do a lot of detecting, man.
Yeah. Found detecting?
Yeah,
Yeah.
volleyball court. Yeah, I find a lot.
Like in the water or something?
No, that's a volleyball court.
4,200.
How much?
4,200.
Shakes his head when I come in.
You're always bringing in more and more sterling. You're not gonna like my price today on that. I can read you an email that I got from the refiner. As you've seen, the silver market experience record pricing and trading volumes, although the rise of prices. Please know that the refiner, I'm not going to say who they're, values each customer's partnership. We've always prioritized serving the fastest, most reliable settlements. We understand metal transitions require trust and transparency. In response to last week's record volume, we will temporarily pause purchases on sterling and 90% and 40%. With that in mind, our commitment is to continue supporting your business, including both buying and selling nearly all 999. So they ain't even taking all that. So there's nowhere to sell that stuff. And I bought a lot already that I have for last week from you. For me, there's nowhere for me to sell it. I had an independent guy that was buying it, but he's quit buying it as well. So
you won't buy it at all?
It'd probably be so low you ain't gonna like my offer on it. Because I mean, I'm just holding on to it till hopefully somewhere opens back up. And they were paying 90% on it. They stopped taking it for a while, opened back up, paying 80%. Now they quit taking it again. So I don't know if when they open back up, they're gonna say, hey, we're paying 70%, you know? I don't know. So
can you check a few things?
Yeah. Is this one not stamped?
Yeah, it's stamped. It's European though.
It's coming up good. Is it stamped sterling on there anywhere?
No.
Oh yeah. All the old European markings.
Yeah.
I mean, it's coming up 95.3, which the ones I like come up like right at like 93 on this. See how that one's like 93.4. Those are the ones that I really feel 100% confident in buying, but I mean, it's probably good. This don't look the greatest silver wise.
I know.
No, that's not.
Okay.
It's coming up 69 and 20% copper.
These are marked sterling, but they have a.
Does it look weird? Weird patina? Coming up too high. They're coming up like 99.
Yeah, that's what it says on the bottom, I think. Something like that, maybe.
Oh yeah, silver 990. Yeah. So yeah, that's right because that's what it comes up on here.
And yeah, check that. I mean, I know parts of it aren't, but.
Hey everybody, this is Rob Keynes with the Freedom Report. This is being recorded on Thursday, the 22nd of 2026 at about noon, my time, Central Time. And today's video is going to be all about silver. I was actually going to do an economic report because I haven't done one of those in a while. And I was checking out the silver statistics and I found some interesting data you guys are going to want to take a look at. I think silver's going on a massive run. And when I say massive, I mean massive. It's being run. We're seeing stocks come out. Well, I'm just going to show you the data. I think silver's running right now, and it may run to 150 like I predicted, and it may go to 150 faster than I thought. And it may be on the final leg of its run to unobtainium and to where it's very hard to get. And I'm going to tell you what's happened literally overnight in terms of the supply chain in the U.S. in addition to giving you the data. Because as you guys know, I run a big gold and silver business in the US, and what my refiners and manufacturers are telling me is very, very interesting. So we're going to go to the data first, and then I'm going to give you the story about what's happening to physical 999 silver, and it's different than what was happening last week or just a few short days ago. This is big news in silver. All right, here we go. So I'm just going to show you the price chart here on TradingView. I would show you the normal one that I normally give you on goldprice.org, but it's not showing up. I think so many people are hitting that site that the silver chart basically is not there. So this is, I'm sorry, Trading Economics. This is silver's price. This is just a daily chart, and you can see it's traded as low as 91. It's up to 96. So there's been a little bit of weakness in silver this week. It came down from about a high of about 93.5 last week to about, I want to say about 88, 89, and then it's popped back up. In fact, let's look at the 1 week chart. What did it get down to? It got down to below 88. It got down to 87 and about 21 cents. And then in just the last couple of days, it's popped back up to 96.41 as we're looking at it right now. This is astounding. That's a almost $8 increase in the span of about a day and a half, 2 days. It's running hard, and I'm going to show you why it's running hard. And I was going to show you the long-term silver chart. I mean, before we get into the data, look at this. This is stupid. Okay, it was running $32 on March 25th, and it's a straight line up over the last several months with no major pullbacks. Now, that makes me nervous because from a technical perspective, you would expect there to be a pullback. Well, I don't, but there's not one, and up until this point, we had plenty of physical silver. I'll get to the physical silver in a moment. We may be starting to actually run out of freely available physical silver, and at first it was just a refining problem, and I think there is silver still available. But I think worldwide, we're starting to run short on silver. All right, here's something that Craig at TF Metals posted on Twitter yesterday. And this was as of the 20th, earlier this week. That would have been Tuesday. He saw a net change right here on the right-hand side in the silver chart of an increase in open interest of 4,000 contracts. And if you pull this column down to here, 1,900 contracts were for March, which is the dominant month, because you can see 100,000 open interest. And then the next big month was May with 21,000 open interest. It added 851. And overall, across all of the coming months, because it's a futures market, so you're playing the futures price, an increase in 4,151 contracts. That typically means we're going to have a short increase in silver and a pull down in price. When you see that many contracts added in a day, it's usually short positioning, especially when you have a chart that looks like this. How many people are going to add 4,000 contracts on top of that? Because from a technical standpoint, you're cruising for a bruising, right? You're looking at it going, it's going to pull back at some point. We're going to lose our shirt. But it didn't. It increased 4,000 contracts, and that's not stopping the price. It's adding to the price. And this is a huge change from what we generally see in the silver market. Usually huge daily or weekly increases, in the open interest are short volume on silver, not long. And we also have a change of 1291 today. If you look at the right-hand chart, 982 contracts in May. And here's the thing. These aren't just going on the near-term dominant contract of March. These are coming down to May, to July, and to September. People are taking more bullish positions on silver, not just in the near-term trading month, futures month of March. They're taking them and extending them out 7 to 8 months of trading. People are going long silver, and they're going long silver on a longer timeline. So not only is the long interest increasing in silver, which is spiking that spot price, but people are making bets that 6 to 9 months from now, silver is going to be higher.
This is huge. This is very rarely, if ever, done on the silver market. I've been covering this for 16 years. Very rarely, if ever, have I seen that in silver. And this is also very interesting. You guys have seen this chart a bunch of times. I'm only going to look at silver. And typically, I'll tell you that the bullion banks are net short 46.1%. So almost half of the short interest is the bullion banks. We know it's the swap dealers because you go over here and you look at the numbers. But here's what's really interesting. Look at the net changes. Look at this net change line. You look at the producer merchants right here, and you come down to net changes, and they've dropped an overall of 2,200 contracts long and 2,200 short. What is the net of that? It's about the same because they're dropping some longs and they're dropping some shorts. So the producer merchants aren't moving up their short position or their long position in any reasonable amount. So it's not the producers or the merchants, or what we call the legitimate market hedges, people that actually deal in the physical to supply their business or to sell it to people to supply the business. They're staying out of the price changes. It's not the producers, the miners, or the merchants like the Samsungs and Apples. It ain't them. It's the swap dealers and managed money. Look at the swap dealers and managed money. The swap dealers dropped almost 6,000 longs. It means they've reduced their long position by 6,000 contracts, and they reduced the short by 2,300. But they've reduced about 3,600 more longs than short. It means they increased their overall short position as a percentage. They're going overall more short, the swap dealers are. And they're rotating out of contracts. They're dropping both long and shorts, but they're taking a higher net short position as a percentage. And that matters because it's the net short position or the net long position which determines prices. Because if you come in, somebody comes in hot and issues a bunch of short contracts to get someone to take the other side, it's going to draw down prices. Well, not only are the swap dealers or bullion banks doing it, but the managed money's doing it. They dropped 4,178 longs and only 2,148 shorts. For the first time in a long time, the managed money and the bullion banks are taking the same side of the trade, and they're going net short. And guess what that's not doing? It's not stopping the price. You have both the financial side and the bullion bank side, the market makers, and the financial side, which are the financial houses that hold these for their portfolios, for their clients, pension money, whatever kind of money, and they're both going more short, which is ultra rare. It's usually the financial houses and bullion banks on the other side of the same contract. No, they're both going net short, as I showed you on the commitment of traders chart. Look at this. Okay? And the price is still going up. That's astounding. The price is still going up. Well, let's look at American banks versus foreign banks. You guys know from a couple of weeks ago, I said in silver, this is a January bank participation report. I showed you December. And in December, for the first time in God knows how long, U.S. banks went net long on COMEX and silver while the foreign banks were net short. Why would foreign banks want to be net short? Let me give you a clue. They want to be net short to bring the price down. Why? To get the silver. How do I know they're taking the silver? Well, wait until I show you registered stocks. That's really going to shock you. I think the foreign guys are in here shorting silver to get the physical out as cheaply as possible. I think that's what's happening. And I think they're pulling a lot of new demand through the supply chain to replenish silver stocks through the refiners. And that's why the refiners are so blocked up. They're max city. They are absolute max city. And I'll get to more on that in a moment. But here's the January bank participation report. We know in December, the U.S. banks went net long silver for the first time, and I don't even know how long. Did they do the same in January? Well, yes, they did. A little bit higher percentage. So we're going to take a look at silver. We're going to go down here to silver. COMEX silver, these numbers, this is net long for U.S. banks, and this is net short. They're net long, 16,146 contracts, and net short, 15,099. That percentage of net long inched up a little for the U.S. banks. The non-U.S. banks went 50,766 contracts short and only 9,577 long. So of the banks, the net short is still 65,000 to 25,000. So these swap dealers, the banks collectively are still net short silver, but the U.S. banks are more net long than they were last month by a sliver. See, the U.S. banks are they're going long. They're saying, we see what silver's doing. we're going long. It's the foreign banks that are shorting. The foreign banks that are shorting. And then we have really high deliveries in January. January is not typically a big delivery month. How do I know that? Well, look at the amount of contracts in January. You only have 270 contracts left. The big trading month is in March. 100,000 contracts. Well, you have to have a bunch of contracts to get one of them delivered, right? If you only have 270 contracts left, and January is not typically a big delivery month for silver because you only get 6 big delivery months in silver a year. And it's March is the big one after December, not January. But despite that, they've managed to pull 8,561 contracts of 5,000 ounce silver off of the exchange in a typically a non-delivery month. And if you multiply 8,561 contracts, and each contract is 5,000 ounce silver, that's 42.8 million ounces of silver delivered in a typical non-delivery month. 42 million ounces of silver in a typical non-silver delivery month. And who's shorting silver? It's the foreign bank. The foreign banks want the silver. It's China, Russia, whoever. They're the ones that want the silver. They're shorting it to get it off on a non-delivery month, for crying out loud. And if you look at how that happened in silver, the first day they stood for 2,200, then 1168, then down here 1624 on the 7th, and it all adds up to a cumulative total so far of 8,561. And we got a couple of delivery days left, not many, okay? But we got a few left. We might get to 9,000 contracts. We may get to 43, 44 million ounces in what is considered a non-delivery month because there's not any open interest left. March is the big trading month. And what we saw was people bringing contracts forward into January. I've never in 16 years seen that at the level it was. Usually you push your contracts out because if you want a position and as the end of the month comes, you got to rotate out of your current month into the next month. It's a futures market. You're not looking back on price. You don't bring a futures contract back to you from March to January, but that's exactly what was happening. Why? To get the deliveries. And who's getting the deliveries? The foreign banks who are keeping the price down so they can get it cheaper. And despite them doing that, the price has gone straight up since freaking March. This is insanity. There's massive deliveries. Now, we're not running out of silver. People tell you we're out of silver. We're not yet, but we're being raided. The COMEX is being raided. And you want to know how I know that the COMEX is being raided? Well, it's because that they're taking the silver stocks. And I'm going to show you that. If I can get that come up, you guys are going to see that they're taking the silver stocks. And we're going to show that. Here we go real quick. Share silver stocks. Here we go. All right. So this is as of yesterday, which is the most recent available. Today's won't be available till tomorrow. Report date 1/21/26 of silver metal depository statistics. And I've highlighted the adjustments to inventory. There were 3 million ounces off of the Asahi depository that went from registered to eligible. That means it's not trading. It's not free float silver. Free float silver is what you can deliver on a contract. This eligible category here is not deliverable. The registered is, okay? So it's being moved to registered because somebody wanted it, claimed it, and they put it in eligible. Eligible means it's owned by somebody, and they're not allowing it to trade, okay? And a couple other depositories. We go down here, yet a net move of 3.7 million ounces of silver that's no longer liquid. We had over 119 million. Let me highlight this in red for you. We had over 119, well, maybe orange. We had over 119 million as of last week. Last week, 119 million ounces were in register that could be delivered. 3.7 million ounces came off. Why did 3.7 million ounces come off? Because people are in there taking the silver. Okay, do you get what's going on? Who's shorting the silver? It's not U.S. banks. The biggest shorters are the bullion banks I showed you on the COT report. And the biggest shorters out of those banks are who? Foreign banks. Foreign banks are shorting silver to keep the price down. And somebody's taking delivery. I'm guessing it's the foreign banks who want it. For what? They're foreign customers. The U.S. COMEX is being rated for physical. Now there's still 116 million ounces and registered. And as long as that number is legitimate and not a complete fabrication and a lie, which we don't know, people are going to say it on social media. They're going to say it's a lie, it's a lie. And they could be true. We just don't know. We don't have that data to look at. I'm an auditor, a former auditor. I want to know what the data says, and I want to know about the integrity of the data. I could tell you what the data says. I don't know about the integrity right now. I can't tell you that. So what I can't tell you is if that 160 million ounces is actually free floating. But I can tell you that the data tells me that foreign banks are shorting the market and taking the silver off. That's apparently what it looks like to me. Now, what's going on anecdotally? I was talking to one of my mentors today for our bullion store. I run a national bullion store, as you guys know. You should know by now. And we sell. We've got about 20 other wholesalers, and we sell to about 30,000 customers. We're a fairly healthy business, and it's growing by leaps and bounds. I'm still trying to get more gold in the store. It's crazy. I talked to one of my mentors this morning. Here's what his supplier of planchettes told me, that they're now charging $3 over spot for those. More for a 3/9 fine planchet. A planchet is what you get before you do a coin. This is a final coin. Okay, this is a Kinesis coin. It's been stamped. I'm not going to show you the front because the coin we haven't debuted yet. Hint, we're going to have a new one in silver. That's a prototype. We're working on it. Those planchets, before they get stamped, went up $3 above spot. And I'm like, wait a minute. That's going to be hard for me to sell and make any money on that when my costs increased $3 an ounce. Why? Because refining, they're not completely out of silver, but refiners can't get them enough 3/9 fine pure. It's that supply chain I've been harping on for months, which is gobbled up and gooked up, and they can't get enough silver in there to be refined. Okay, and with this foreign people coming in and taking the refined, 3/9 1,000-ounce bars that you get 5 of them on a contract and taking delivery, they're taking the refined silver off of the industrial market. And our refiners in the U.S. don't have enough capacity to refill it. And so people like me who make coins can't get the stock. The price is rising. Now, I can still go buy sub 3/9 silver, 90% constitutional scrap of various types off the market and have it refined. And thank God we have a refinery that we work with that's not at 100% capacity, and we reserve space. So I can still get it. Okay, but I have to go to this minter over here. Some of my other, mint options, and so not all of the refined silver is accounted for and is rising, but the prices are starting to rise. Okay, Rob, that was confusing. What does that mean? As I'm looking at the supply chain, most of the big refiners can't get enough silver out to replace silver that's being taken off our market, apparently to foreign bank account holders on the COMEX, which means foreign entities more than likely. Why would you sign up with a foreign bank if you're in the U.S.? You're going to sign up with the U.S. bank, more than likely. So I can only surmise that 3/9 fine silver off the COMEX is being sucked off so fast that our refiners can't replace it. And what's happening is those refiners now are not going to be able to get gold and silver coins and bars to your dealer at the same price, hence why the dealer prices are rising. And I looked yesterday, I haven't looked today, but I looked yesterday, and we're still looking at $7, $8 an ounce over spot on common silver bars and coins, private mint ones, the ones that don't typically have those premiums. But I can still buy silver off the street and have it refined. So we're not completely out of silver. There's still silver in the U.S., but the suckage from overseas, from foreign parties, is so strong that is completely locked up our supply chain. And that's why your prices on silver, your premiums have shot up, and not just on American Silver Eagles. Now, there are enough planchets. If the U.S. Mint wanted to do more Silver Eagles, they could. Because I know some of the refiners have capacity, but they're running out. And, even the smaller refiners are starting to get demand. And that's what's happening. So silver is not unobtainium, but it's going to be really damn fast. And that physical demand is dragging that price up despite the best efforts of both the financial houses and the banks to suppress it. It's not only the banks now, the financial houses are trying to bring the price down because they think that it's not going to keep going. So they're dropping their longs. That puts short pressure on the market. Okay, despite them jumping in on the short side of the market, it's not slowing the price down. Physical is starting to take over. Physical demand is starting to take over. This has been going on for a while, and this is not normal on the U.S. COMEX market. It is not normal. Okay, so we're not out yet, but I can see it. I see the supply chain because I deal with the whole thing. I deal with rough product and I deal with refined product, and I deal with companies in between. I'm not just an analyst. I do this on my everyday job, and it's starting to get really interesting. Making my $150 price prediction for silver in 2026 maybe look really darn conservative. I don't know what it's going to go to. This is ridiculous. By the time the video comes out, we may have hit 100 or get really damn close. And I said last week, I said, we're really close to 100. And I was right. And it may be that premiums at your coin store go way up and on your online dealer go way up because they can't get it replaced fast enough because people are sucking it off the COMEX, the big bars. That we can't get refined bars to cut and make coins and bars. So all the refiners are working overtime. That's what's going on right now. It's not unobtainium. You know, it's not, we're not out of silver, but the demand is so strong that eventually, really soon, we may be. And then all of a sudden, that mining output that's been lagging demand for 5 years, that billion ounces I've been talking about for years, the Silver Institute report, together with Metals Focus, saying that the mines have not been able to keep up with demand for 5 straight years in silver around the world. And the fact that the U.S. supply chain is being completely drained of silver to foreign parties means we may come to a point at which silver goes limit up. What does that mean? It means that people don't have enough silver to give you. There's not enough supply to demand, so the price just keeps going straight up. It's already been doing that since March, effectively. And it may go straight up, but faster. It may accelerate. The price increases may accelerate here for a period of time until additional refining can be brought online and additional mine supply can be brought online. And Americans are still, the retail market is still net sellers. They're still selling their silver chains and their silverware and their silver whatever, you know, their sterling and jewelry, 14, 18, 20, whatever. But eventually they're going to run out. And if we don't have mine supply, I don't know what silver is going to go to. I don't know what it's going to go to. There's no upper price limit because we have to have it. It's in everything. And this is why I want to do this video. And I've been saying we're not out of silver, and people have been killing me on social media, and we're not. I'm telling you the truth. I see the whole supply chain. We're not out yet. But damn if we're not getting real close. And damn if our refining cannot keep up. And damn if foreign parties are not sucking our silver out of our markets. So look, if you want to, you know, I know I sell silver and people are going to say, you're just hyping it up. I'm not. I showed you the data. I showed it to you, and you can see the premiums on all the dealers. I'm not making this up. That we are having a massive worldwide run on silver, and I've been in 16 years. I have never seen it like this before. 17 years, actually. It's 2026. I'm now in year 17. Give myself credit for another year. I haven't seen it. Almost 2 decades. Never seen anything remotely like it. This is the beginning of Silver Squeeze 2.0. It's been the beginning for about 6 months to a year. But I mean, we're in Silver Squeeze 2.0. Silver Squeeze 1.0 was really a run on ETF silver that didn't result in a bankruptcy sort of condition and didn't result in a quadrupling of price in over 2 years. We've now had a quadrupling of price in 2 years. We're going on almost 5 times, and it's not stopping, and the physical is being demanded at record amounts around the world. Record amounts. This is the real Silver Squeeze, and we got a bit of time left, but I don't know how much. And the more that I do videos and the more you see the videos on social media and the posts, more people are going to start getting into it. And I'm telling you right now, if the American retail switches and stops selling their silver and starts buying, we may go out of stock within days. Within days from that. When all the dealers say they have no more silver, that probably means U.S. retail got involved. And I don't know if they can bring on enough refining and mining in time to deal with that. And that's what's happening. Wow. I mean, wow. Big time stuff happening in silver. And fun stuff. Stay tuned. We're going to do more. Now, we've got Snowmageddon version 2 coming to us. I may not have power for the next few days because Texas is going to get it where I'm broadcasting from before the East Coast. And we're predicted to get temperatures in the low teens as far down as 10 degrees. And even though Texas has solidified their power grid, we've winterized most of our natural gas and all that, we're still susceptible to power lines being frozen and breaking. So we still do expect power outages, even though the grid has enough power. In fact, the grid has added so much freaking power, mostly for all the data centers being built here. We've added so much, we've added more power in the last few years than we've ever added before. So that power will be on the grid, okay? And a lot of it, natural gas, not the solar and the wind that's going to freeze up in these conditions. We have a lot of more natural gas. We have more nuclear. But the lines could freeze, so I may not have internet. So you may not hear from me for a few days on social media because when the internet goes out and the power goes out, so too do the cell towers. And you may not hear from me. So all of those of you in the path of this storm, please do the following things. Please go buy a generator if you don't have one and get either propane or gasoline and get enough stock of that. Get your candles, your lighters, your blankets, get extra food and extra water, and hole up with your family in one place so you can all be together. And put all the generations of your household together so you can heat with space heaters one room, and survive in those conditions. Winterize your house, drip your faucets, wrap your pipes outside. I'm serious. This is going to be nasty. Do not go on a long distance trip. Do not get on the highways unless you're fully prepared. Be careful. It's going to be nasty. And if you don't hear from me for a few days, I'll come back when the power comes on. At least you're going to have this video. God bless everybody. Everybody stay safe during the winter storms. And when we come back from the winter storms, we're going to see what the aftermath of this silver run this week is. We could be sitting at triple-digit silver either by the time the video comes out or by the time the ice storm is over next week. This is crazy. This is the craziest silver market I've ever seen. It's a lot of fun, and we're getting real close to where we can't get silver. We can still get it. It's slow and it's pricey, but it may come to the point pretty soon where we can't get it. And damn, is that going to be crazy times. Till next time, Rob Keats with the Freedom Report.
We are standing on the precipice of a shift so profound, so fundamental, that most people walking down the street don't even realize the ground is trembling beneath their feet. We are watching the gears of the global financial machine grind and smoke in a way we haven't seen in generations, and frankly, it is terrifying if you don't know where to look. Today, we are going to dissect the psychological phases of the precious metals market and why the boredom you have been feeling is actually a trap. We are going to analyze the historical fractals that predict a vertical move in silver that sounds impossible until you see the math. We are going to expose the systemic rot eating away at the global government bond market, evaluate the fragility of our paper currencies, and challenge the popular narrative around digital assets. But you need to stay with me, because the most critical piece of this puzzle, the specific price target that changes everything, is something I've saved for the very end. Before we dive into the deep end of this analysis, I have a small personal request. If you value independent analysis that digs through the noise to find the signal, please hit that like button and subscribe to the channel. We don't have corporate backers telling us what to say or handing us a script approved by a boardroom. We do the hard job, the research, the fact-checking, the late nights, because we believe you deserve the truth, not a sanitized narrative. If you want to help keep this channel running and fiercely independent, please consider supporting us through the YouTube Super Thanks feature. It truly means the world to us, and it allows us to keep the lights on and the truth loud in an era of silence. Right now, we are living through a historical moment. I don't use that phrase lightly. You look at gold marching confidently, step by step, toward the $5,000 mark. You see silver trading at $94. But I want to tell you, and hear me clearly on this, this is not just a standard run-of-the-mill bull market. We are observing a movement that reminds me of an arm wrestling match between giants. You know how it looks. The prices spike. There is violence and energy everywhere. Veins popping, and then they lock. They go sideways. For months, they just sit there, grinding. It is boring. It is exhausting. It wears you down until you want to quit and put your money in a savings account. But that is exactly the point. That exhausting phase, that test of your patience, is ending. We are preparing for a vertical takeoff. It's almost funny how the market loves to bore you to death right before it makes you rich. It's the ultimate gatekeeper. Our technical work suggests silver is entering a phase of what we call new reality. I remember seeing this exact setup with copper back in 2005. I recall sitting at my desk watching copper spend years trapped in a corridor, unnoticed, unloved, completely ignored by the mainstream financial press. Then suddenly it snapped. It broke free and quadrupled in price, completely ignoring what the rest of the stock market was doing. Silver has been in a cage for decades, bouncing between $4 and $50 like a prisoner pacing a cell. But the cage door is technically open. We are expecting a move in the next couple of quarters that will absolutely take your breath away. We aren't talking about $100 here. That's child's play. We are looking at a range of $300 to $500 an ounce. Why these numbers? Why does this sound so aggressive? It comes down to the ratio. The relationship between gold and silver is historically broken right now. It is screaming at us. Silver is arguably the most undervalued asset on the planet relative to gold. Let's look at the history. Back in 1980, the price of silver was over 6.5% of the price of gold. In 2011, it was about 3%. Today, we are sitting at barely 2%. It's absurd. If gold hits $8,000, which is just an eightfold increase from the bear market lows, something gold has done twice in the last 50 years, then a simple reversion to the mean sends silver into the stratosphere. It's just math. If the historical proportions are restored, silver automatically goes to several $100s. It's as if the market has temporarily forgotten that silver is actually rare, treating it like it's gravel from a driveway. But if you think this is just about charts, ratios, and lines on a screen, you are missing the terrifying picture forming in the debt markets. There is a fundamental reason behind these charts, and it is ugly. We are sleepwalking into a monetary crisis. The fiat currency experiment is wobbling. Look at the United States Treasury market. It is practically on life support. And do not think for a second this is just an American problem. Look at the United Kingdom. Look at Japan. The yields are spiking, the prices are crashing, and the central planners are losing their grip on the steering wheel. Getty Images. They are trying to buy bonds to inject liquidity, trying to put out the fire with a garden hose, but the floor is falling out from under them. Let's be clear about what this is. This isn't 2008. In 2008, we had a mortgage crisis. People lost their homes. It was tragic, it was painful, but it was largely contained to the private sector and the banks. This is different. This is a sovereign debt crisis. We are talking about the debt of nations, debt that dwarfs the entire stock market. When panic hits the government bond market, it is like the central banks of the West, not just a little. They will have to print in volumes that will make the last few years look like a model of fiscal discipline. They have to save the system, because clearly the only solution to a debt problem caused by printing too much money is to print even more money. Genius, isn't it? When that money supply, the M2 aggregate, goes vertical, gold does not wait. It reacts instantly. Gold is the report card on the currency, and the currency is failing the class. We are seeing a global trend of dumping American assets. The world is running away from the dollar. That inflation you feel when you buy bread or when you fill up your car, that is the currency dying in real time. Speaking of cars, despite what the pundits tell you on the evening news, oil is technically coiled for a jump. We are looking at a move from the $60 or $70 range back up to the mid-90s. That is going to hit the consumer hard, right in the wallet. But don't worry, I'm sure the officials will tell us that high gas prices are actually good for building character. Before we move on to the digital side of things, I want to take a second to remind you, if you are finding value in this deep dive, make sure you are subscribed. Comment below if you are seeing these prices at your local gas station. We need to document this reality together. We are heading into a time of extreme volatility. We might see the Supreme Court try to intervene on tariffs, trying to save the world and stop the panic. That might cause a short-term shakeout, a quick correction, a sort of artificial stabilization, but it won't change the tide. You cannot legislate away mathematics. If the bond market bleeds for a few more days, we are going to see panic at the Federal Reserve that we haven't seen in our lifetimes. In that moment, anyone shorting silver, or anyone who doesn't own it, is going to be trapped. They will be caught on the wrong side of history. It's always fascinating to watch them try to regulate gravity. It works for a moment until the apple falls on their head. Now, I know many of you are looking at Bitcoin as the lifeboat. I see the comments, I hear the arguments, but I have to be honest with you, I am skeptical. I think we are going to see a flush down to $60,000. That is going to be a disaster for the people who bought the hype at the top. In a true crisis of confidence, I don't think digital tokens are going to replace money. When the lights flicker and the banks wobble, history tells us people run to what has worked for 5,000 years. They run to gold. If you don't have it yet, or if you are thinking of selling your silver to buy gold, I would say sit tight. The show is just starting. It seems in a crisis, people prefer holding something heavy in their hand rather than a password on a thumb drive. Call me old-fashioned. So, let's recap the storm we are facing. Silver is breaking out of a multi-decade cage and heading for hundreds of dollars. The bond market is signaling a systemic failure that will force unprecedented money printing. And while crypto might struggle to find its footing, gold and silver are reclaiming their throne as real money. This is the time to be vigilant, not complacent. The most interesting part, the real redistribution of wealth, is happening right now for those who have eyes to see it. If you appreciate this analysis and want to support independent journalism, please consider using the Super Thanks button below. It helps us stay online and keep watching the markets for you. Like, subscribe, and share this with someone who needs to wake up. I'm Andy.
We're probably not going to get back into a positive situation with silver supplies until the 2030s. It takes a really high, the cure for high prices is high prices because it'll bring more to market, except to find a discovery, to turn it into a mine, and to get that ore above ground and refined into bars takes 5 to 10 years. There just isn't enough. There's not going to be enough for at least until the end of this decade. And that means super high prices.
Alistair McLeod says, I think the paper game is being fractured through silver and then gold. We'll look back on these events and say they marked the beginning of the decline in the entire derivative business. Wow.
Alistair McLeod is somebody that I've got great respect for. He's a wonderful analyst. He's a great writer, and he's dedicated his entire life to this. He's one of the people that has been in it for years and years and years. So he might go back further than I do in this. There are so many Johnny-come-latelys now that have just jumped on this because it's really getting going and ramping up. But Alistair is somebody that has seen it all, and so I think that he is right here. That it might be not be the entire derivatives business, because Wall Street is always going to try and game the system and change everything into a fractional reserve scheme. So
exactly. I mean, that is the derivative business. The derivative business is pretending you have something you don't and then betting on it. So,
right. Pretending there's more chairs, it's musical chairs. There's really only one. They create 45 and they get us all dancing on the deck of the Titanic.
Yeah, not pretty. So I think that when the market breaks, the price is going to explode. I cannot imagine selling right now. Now's the time for me to be buying silver. So yes, smart silver stacker, that's a mouthful, says the gold to silver ratio continues to drop like a stone. Silver's time has come. And look at this. He's got a wedge formation and the gold silver ratio is dropping through, which of course means that silver has been outperforming gold lately over this period.
Right. And it's in the 70s right now, I believe. And, it was I made some large purchases during COVID when it was up. I didn't nail 120 to 1, but I did get some that were way over 100, like 110. However, at 70, silver is still an extreme bargain at 70. It went to 30 in 2011. It went to 14 in 1980. And that day is coming again. But with the fundamentals underneath what's happening in silver, I would expect that we could go down way below 14 as far as the ratio. Yeah.
Yeah, well, you asked me to put together this chart specifically for this video. I think it
Right.
turned out great. This was actually a lot of fun to make. I think it turned out beautifully. But yeah, basically, you were just saying the gold silver ratio is around 73 right now, as of a day or two ago. And by the way, before I go any further, I should say that this entire chart is upside down.
Yes, I had you invert it so that it showed when silver is outperforming gold, this ratio is going up, not down. But you can also do the silver gold ratio, but then the scales on the side are in 0 point something or 0.0 something. And our brains just don't work as well that way. I wanted it in whole numbers. And so the gold silver ratio provides that. And this also, so whenever it's going up, silver is outperforming gold. But look at where it was in 2011, where it was in 1980, and then look at how undervalued it's been since from 1990 until today. It is still an extreme bargain. It is dirt cheap. Now, look at what the average was, that red line going through all through the 70s. That red line, the 2011 peak, it only visited what was considered fair value against gold all through the 70s. That was like the natural balance of the gold silver ratio was about 30, and that's what it hit. It wasn't, there was an intraday, I think, where it hit 30, not 31.7. So this must be end of day, or maybe, it's not weekly. It's end of day. And 14 in 1980. So from where it is right now, it's saying that it should outperform gold easily. It'll outperform gold 2.3 times. And it could outperform gold by more than 5.2 times. And gold is still, I believe, a minimum of a double in dollars. And so you take this 5.2 times 2, 10.4 times, and that is the minimum. But the gold silver ratio could easily, when it hit 14, there was a huge strategic stockpile of silver that the US had. They've sold it all off. The above ground stocks were far larger than they are today, far, far larger. Today, we are in a situation, and you didn't have, derivatives trading was very new. You didn't have hundreds of ounces of paper contracts for each ounce of real deliverable silver. The potential to blast past that of 14 exists. So if you're at 73 and it goes to 10, you got 7.3 times the return on silver that you would get at gold, and gold doubling that. The potential here for silver is just enormous.
Couldn't agree more. Absolutely. And speaking of the above ground stockpiles, you shared with me this table, which I believe comes from the Silver Institute, showing the silver supply and demand year over year. And this table is really busy and noisy, and I don't expect people to look at it for very long. So let me just point out something very quickly. The market balance, basically the amount of new silver supply minus the demand, is a small positive number typically for 5 years in a row, and then it became a fairly large negative number for 5 years in a row. So we used to accumulate more silver around the world, basically dig up more than we used in industry or investment. And now that trend is reversing. So now the trend is going negative, where basically demand is outstripping supply.
If this thing went back to another 5 or 10 years, you would see that silver's big move from the 4s into the 20s occurred while there was a silver deficit, like there's been for the last 5 years. Then when it hit $48 in 2011, that spike, a whole bunch of people went out looking for silver. takes a minimum of 5 years to get into production. And that's the reason you're seeing these small positive numbers. We had a deficit. The deficit went away, but there's this delay. And that delay is good because now it's saying that we're probably not going to get back into a positive situation with silver supplies until the 2030s. It takes a really high, the cure for high prices is high prices because it'll bring more to market, except to find a discovery, to turn it into a mine, and to get that ore above ground and refined into bars takes 5 to 10 years. There just isn't enough. There's not going to be enough for at least until the end of this decade. And that means super high prices. When you go to that market balance, less exchange traded products, that's 7 years of deficit. So, yeah.
Exactly. That's what I was going to show. So now let's look at these numbers in a chart format. It's much easier on the eyes.
Yeah.
So let's see what it looks like. And basically we can see, I'll explain this in a moment, but what we can see is that the amount of silver available has been shrinking for the last 7 years. That's the key takeaway here. So what are we looking at? The dark gray is the market balance. So above the zero line, you can see small positive numbers in dark gray for 5 years. And then those dark gray bars go negative and they start getting bigger and bigger and bigger. So basically we're running out of silver.
The dark gray market balance is supply versus minus demand.
Exactly.
Yeah. Okay.
Then we factor in the light gray bars, which is the net investment in ETPs. Those are exchange traded products. So basically, if some of the silver that we're mining goes into exchange traded products like ETFs, then it's effectively coming off the market, right? It can't be used for anything else. So we can see those light gray flows sort of added in with the dark gray flows. And the net effect when we combine them is the red hashes here, these red bars.
Right. So I want to point out for people in 2020, the red line is a little bit above the bottom of the light gray line, and that difference there is exactly equal to the dark gray line above. So it's the ETBPs, and then you've sort of subtracted what the surplus actually was in the market balance, right?
Yeah, exactly. I think
that's
people
the reason the red line isn't at the bottom.
Yep, correct.
Okay.
And so the net effect here, the way we interpret this is if we look at the red line, we see the red line is above zero 3 years in a row. So we were sort of adding more silver to the world. And then the red line is below zero quite substantially for 7 years in a row. So that silver is disappearing. So the available stockpile is dwindling. We're basically running out of silver year after year for 7 years.
Yeah, and this is just a measurement of each year. And what I find interesting is that the market balance, you can see from the last table, the market balance went negative in 2021. The market balance with the ETPs included went negative in 2019. So 5 years for the supply demand, 7 years when you include investors.
Exactly. And so let's see what it looks like when we take all of these years in red and look at it cumulatively. How does it add up 1 year after the next? And we can do that in a waterfall chart that looks like this. So we have those initial bars above zero that keep adding one after another, adding to the previous one. And then we get those 7 years of dwindling balances. You can see that it falls below zero fairly quickly, and it goes further and further negative for the remaining 6 years. And the cumulative effect is that there's 1,100 million ounces or 1.1 billion ounces of silver that we've reduced from the available stockpile over the last 7 years. So
yeah,
it's dwindling. It's dwindling.
And I want to point out to the viewers that if this chart started in 2019, that bar right there would start, the top of it would be at the zero line. The only reason it's above, because that year is a down year. The line that connects any of the two bars is the close of 1 year and the opening of the next year. And so if the data started in 2019, everything would be below the zero line, and that would place 2025 down and 2025 isn't over with yet. That was a projection that we saw, and the demand has increased. By the time they've got the final data, 2025 is going to be a much larger deficit because of all the investment demand that is happening right now. Those projections are always like a month or two behind. So they made those projections before the rush that is happening right now, before silver broke into all-time highs. If you started this in 2019, it would almost be 1.2 billion ounces of deficit cumulatively. But when you add the rush, it's probably going to be more.
Exactly. And you don't have to be an economist to know that when you have shrinking supply and increasing demand, the thing that has to move is price, and it goes up. So that's what we're going to see. So eventually you're going to run out of silver and you won't be able to get it. That's why we call it unobtainium. And these are the 5 stages of silver: undermined, undervalued, unchained, unstoppable, and then unobtainium, in progress.
Yeah. And I have to add a 6th one there. After it becomes unobtainium, it becomes unaffordium because nobody will be able to buy it. That is when, once you can't get any, that's when the paper contracts diverge from the physical, and physical just absolutely explodes and goes through the roof.
Hello, my fellow silver and gold stackers. Today we're starting our silver giveaway. We're giving away 20 ounces of silver. All you have to do to enter is like, comment your favorite type of silver or your price predictions for 2026, and subscribe to the channel. So that's like, comment, subscribe. You'll be entered to win. At the end of January, we pick our member. We're going to go do a live broadcast, and you'll get 20 ounces of silver. So join in the silver giveaway right now. Last month, someone won 10 ounces. It's that easy. Just like, subscribe, comment your favorite type of silver or your silver price predictions. And yeah, you have a chance to win 20 ounces of silver. Thanks so much. Hello, everyone. Thanks for joining and welcome back. Before we begin, please hit the like and subscribe button. It helps us grow tremendously. Our guest today is my good friend Bart Brands. Bart is a precious metal specialist at Gold Republic, and he's a certified security intelligence professional. Bart, welcome back.
Thanks, Ivan, for having me again. It's what a start of the year it is.
Yeah, what a start. Exactly. You know, it's a crazy time right now, an exciting time in precious metals. I got a LinkedIn message today from a friend, and he said, in Shanghai, silver's at $105 an ounce right now. Obviously, in the paper markets in the West, we're seeing that it's only around $94, but I wanted to talk to you about that first before we
Let me just interrupt you.
Yeah.
Only about 95.
I know. Hey, now that we're at 94, 95, we're like, oh, it's only 94. But what's the difference? Why do you see it $105 in Shanghai in the East, and then in the COMEX and in the West in the paper markets, it's $94, $95?
Well, it is one of the signs that we're not at the top yet, and we're not in a functioning market, because in a functioning market, arbitrage would, of course, make sure that this difference is eradicated almost immediately. So these differences are a sign that we're not in a functioning market yet. I think we will be there at one moment in time, but we're not there yet. And it shows us that the paper market, I think the Western paper market, is still a highly manipulated market, where short selling, naked short selling, well, you can see it on the US Debt Clock website. You can see that there is still around 350 paper ounces traded for every physical ounce. So we are still in a highly manipulated space where these differences can occur due to that manipulation, and arbitrage is not possible because, of course, in January, China implemented some new restrictions on the export of silver,
right?
Where they have to decide or get to decide who can export silver. So importing it into China and making sure or benefiting of arbitrage is not possible, because what do you do then with your yuan? You cannot export it again. So it is, I think, well, first of all, a sign that the markets are not functioning right, a sign that there is manipulation in the West, and a sign that silver is still in its early days when it comes to the valuation, the true valuation of this. It's highly precious, super rare, and the most, in one exception, the most highly usable commodity that there is on Earth.
What are you seeing at Gold Republic? You have insights that you can see sentiment, buyers. Are they selling? Are they buying? Are you seeing new institutional buyers? Like, what are you seeing at Gold Republic in terms of gold and silver buying or selling?
We just had a crazy year. So 2025 was a year where we thought, we were in a bull run, and we had this very high expectation of 2025, and we just blew right through it, and not by small margins. It is by 20, 30, 40% higher turnover than we thought that we would have in a very positive guesstimation of what we were to do. And now, beginning of 2026, we are at, well, this is the 21st of January. We are en route to have our best month turnover in the history of the company.
Wow.
And so, we are en route to another amazing year. We see there's almost a frantic panic when it comes to, and let me tell you this, we are the biggest in the Benelux area. We have 1.6 billion euros under custody.
Wow.
And we have more than 100,000 customers, but we have 17.5 million people living in this country. So, and we also serve people from Germany, from Belgium, from the United Kingdom. So you can still see that we are in the beginning of this event,
right,
where a lot of people still have to be made aware of what's happening in the world. But we are so busy, we can hardly keep up. And there's people should know, especially stackers, especially silver stackers, and that is that we are in direct. We have salespeople in the biggest refineries in the world, let's say Valcombi, or trading desks like StoneX. We are getting word that sourcing silver, so the silver concentrate even, is getting harder and harder.
Wow.
Delivery times are increasing, and we go directly to the refinery. So there's no broker in the middle. We go directly to the refinery, and they are telling us, okay, we need to, the expectation here is that it will take weeks to deliver. And we're not asking for coins or small bars. We just want the 1,000-ounce industrial bars.
Right.
And people are just telling us, it's going to take a couple weeks because the demand is so extremely high. That and that is of course one of the other things that I feel will make sure that this run on silver is not over yet, and we are in the middle of a new form of price discovery where silver is seen for what it is, and that, I think, Ivan, is even more important. For years now, your audience, stackers around the world, have seen how precious this commodity is.
Yeah.
And that is both for silver and of course for gold. We've seen it, and we have just been patiently stacking up because we knew that this was going to happen. And now that we went from, let's say, $30 an ounce last year to now $95 an ounce, which is triple in 1 year, I think, well, first of all, congratulations to all stackers. all
Mhm.
stackers. If you are part of the 1,000 ounce clubs, 1,000 ounce club, you have 100 grand in silver right now. And that was, just a couple years ago, that was maybe 20 or 30,000. Now it's 100 grand, which is a lot of cash. And so, I think this is just the moment that we have been patiently waiting for. And I think the moment's not over yet. I think the best is still to come.
Hello, everyone. Hope you're doing well. If you can please click the link in the description below and just follow us on Instagram and follow us on X. It'll be much appreciated. We're putting out new content every single day. We're doing financial content, silver and gold, and political content. Just please take a second, click the description below of this YouTube video. Follow us on X and follow us on Instagram. Thank you so much. Yeah, no, you absolutely nailed it. Do you believe that we're approaching the day, or increasingly approaching the day where the average investor like us is not going to get their silver?
Force majeure, I think if you have a paper product, you should be very worried.
In today's video, we're going to talk about if you are an Australian resident.
We can settle in cash.
Right.
And settling in cash, of course, if you don't want cash, if your cash is worthless, then you don't want cash. You want the physical product.
Right.
I do see a lot of the small time dealers, the coin shops, the online coin dealers, that they are backward deliveries where you have to wait 4, 5, 6 weeks. And then there is the possibility, of course, that if they get a promise of, let's say, a refinery, that they will, or a wholesaler, that they will get the delivery in 5 or 6 weeks. And the pressure is on that these wholesalers just have to tell the smaller dealers, all right, I'm sorry, we don't have the material.
Right.
So there will be examples of this happening. I am almost certain of
In today's video,
this will happen. That will effectively, I think, will be the end of some of the smaller coin sellers of coins and smaller bars, which of course I think is not good. I would feel sorry for both the organizations and of course the customers of these organizations. But it is almost inevitable in a market like this where supply is this tight, where you have, let's say, large industrial demand. So let's say if Samsung goes directly to a mine and they can just buy the concentrate for their solid state batteries, or EV manufacturers go directly to the mines, then of course that will have a very large impact on organizations that rely on blanks, that rely on smaller amounts of metal. So yeah, I think it's almost inevitable.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metal storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community. By supporting local, we continue to expand and innovate our services.
Is there anything that you have your eye on right now that's concerning you? If it's not in the silver or in gold markets, whether it's geopolitically, whether it's what you're seeing in your country or around the world, what's concerning you right now, Bart?
Well, it's not so much of a concern as it is something that I think people should be aware of. And that is, of course, the situation in Greenland. I think Trump is speaking right now on the World Economic Forum, also on that subject. There was a USGS, I think, survey on Greenland where it said, there's 1.5 million metric tons of
critical metals,
rare earth minerals and metals that are still there in the ground, and that then what this is about. This is not about this is just about resources. And I feel that Europe is slipping. Europe is being left behind. So especially for the people in Europe, I would say, keep stacking. But also, I think it's just, we see a systematic breakdown of our social contract. And where the social contract starts to fail, you need to pick up your own slack. And that is why I'm a firm believer of making sure that you have nice neighbors, make sure that you know them, be prepared, become a prepper, start stacking if you don't. And I told you this at the end of last year, and I'll just repeat it, I see prices of gold and silver going through the roof, new all-time highs every day. If you don't have any metal, the price is not relevant. You have to buy it. And I've been saying this now for maybe 2 years because the prices have been rising for 5-6 years. And people keep telling me it's too expensive. And then I ask them, do you have any metal? No, I don't, but I'm waiting for a pullback. Well, good luck waiting for the pullback because it's just gone up. So if you don't have any metal, make sure that you don't look at the price, look at ounces, look at kilograms, look at grams, just stack your first metal. And then of course, if, for example, and I think this is one of the things where I have to congratulate the stackers. Let's say you have 1,000 ounces of silver and you've been stacking for 15 years and you've reached that goal. And now you see that you have 100 grand in silver. Treat yourself. I think we've been through hard times, and there is no shame in selling 100 of those ounces and buying yourself something nice, or treating yourself and making sure that make sure you have a goal in mind, but there is no shame in treating yourself and saying, what, I've done good in the past, how many years that you have been stacking.
Yeah, no, you absolutely nail it. I really resonate with that, and I agree with that, Bart. Before you go, Bart, I really want people to connect with you. I'm going to put your links in the description below so people can connect with you guys, but where can they find you?
Well, I would always say, find me on my Instagram. If you want to put a link in there, that's nice. We have a YouTube channel, the Gold Republic YouTube channel. We have an English spoken YouTube channel as well, Gold Republic Global, where my colleague Alexei Jordanov interviews the all-time greats in the space. So the YouTube channel of Gold Republic Global, I think, would be for English spoken, for your English audience, is a real must-see. And of course, if people are interested in opening an account with us, you could.
Hi, Clive.
Hello, dear friends. My name is Clive Thompson, and I'd like to introduce Nicholas Ward, Director of Gold Bullion Partners in London. Nick, how's it going?
Yeah, it's very difficult, Clive, to say the least. I've never been this busy in my whole career. It's actually worse than COVID, to be honest, when it comes to silver. Deliveries are taking weeks and weeks. Premiums are going through the roof. And come March, I think we're really going to see the pedal hit the metal, if you like, and there's going to be some severe shortages of silver. But look, I've seen you talking about this over the last month quite substantially. It's nothing you don't already know. But I wanted to kind of frame this and let your audience exactly know why it's happening. So before we start on the nitty-gritty and the details as to what we're seeing at the coalface, I want to frame the conversation and give you a backdrop on the news that's actually coming out of China, which I think will add a lot more perspective to your audience on exactly what's really going on. Now, the Bank of China have just released their macro data. And for want of a better word, Clive, it's horrifying. They're currently dumping trillions into the market, and it's the biggest liquidity surge we've ever seen. I've never seen anything like this. And in my personal opinion, I believe it's going to spark one of the largest commodity squeezes in history. So what's actually going on? Well, China are rolling out the biggest money printing event in history. So their M2 money supply it's just going parabolic. It's now over $48 trillion. And just let that sink in. That's more than double the entire US M2 money supply. And just for anyone that doesn't know, if that sounds like jargon, that just means the money that can be accessed easily and quickly, basically. And look, historically, when China prints like this, that money doesn't just sit in stocks, it spills over into the real world. So mostly assets and commodities. So they're trading paper money for real stuff, gold, silver, copper, you name it. And while China, they are the world's biggest commodity buyer, while they're printing trillions to buy assets, the Western banks are reportedly sitting on massive silver short positions. And we're talking about 4.4 billion ounces short, Clive, which that is a phenomenal number. With global mine supply every year at 800 million ounces, that means these banks are shorting about 550% of the world's annual silver production. 1 year's worth of production. So that's just a train wreck waiting to happen.
Yeah, they can't all have it.
They can't. They actually can't. On one side, yeah, you've got China, they're debasing their currency, which naturally pushes up gold and silver anyway. Whereas on the other, the Western institutions are betting against rising prices with positions, like you said, that can't be covered. You cannot buy 4.4 billion ounces of silver. It just doesn't exist. So I don't want to sound bombastic, Clive, and I know there's so much clickbait out there at the moment, but this really is shaping up to be a commodity super cycle 2.0. And if silver starts moving, fueled by Chinese demand, your solar, your EVs, we can come on to those later, and this currency debasement, these banks are going to face margin calls. And in a market this tight, a short squeeze doesn't just mean higher prices. It means a full-on repricing of the metals because there is such a finite amount of them. In a world where central banks are racing to destroy their currencies, the smart move is obviously just to own something that they can't print. I mean, it's just basic logic. But coming down, I suppose, now to the micro and what's exactly happening with silver here, Clive, and what, like I said, what we're seeing at the coalface. This is really turning out to be one of the most extraordinary and historic Januaries we've ever seen when it comes to delivery of the physical asset. And a lot of the hidden participants as well, who are coming into the market that we can't identify. So looking, I suppose to begin with, a logical start would be looking at the COMEX numbers right now. And as you know, Clive, the COMEX system runs on a delivery cycle, whereby certain months, so March, May, July, September, and December, these are major delivery months. So this is when all the industrial users and all the heavyweights turn up to lock in their supply. And, well, basically the vaults are expected to have and to move their inventory when that comes in. Then historically, you've got the quieter months, like your Januaries, where a lot of contracts roll over and the industrial buyers just wait until they naturally take delivery. Typically, Clive, in a January, you might see a few dozen, maybe even 100 contracts at most change hands. But this January, it's not behaved like that at all. I think it was the first 72 hours of the month, we had thousands of contracts that were standing for delivery. It was about 4,700. And of course, each one of those contracts represents 5,000 ounces of physical silver. So that's about, I think the number was 23.5 million ounces, all demanded in the first 3 days of the month, when people naturally expect it to be quiet. So someone somewhere wants their metal. And now the other thing that's really interesting here as well is the pattern of the buying, which makes it even more telling. This isn't retail buying, just coming in and looking for their coins and bars. The size, the timing, and the willingness to pay higher prices, well, it can only point towards institutions, industrial users, and dare I say it, sovereign nations. I don't know, we wouldn't know, but it looks like it is. So these players in the market, they're buying silver, Clive, because they need it. This isn't speculation. And what's obviously so key is they're doing this in a non-delivery month, which for them is actually it's really inconvenient. They're paying extra. There's a lot more paperwork to fill out, and they're just creating a headache for themselves. And markets don't just do that unless the alternative is obviously far too risky. So yes, I have never seen anything like this ever, and so many of my clients are asking me, well, look, who's actually delivering and no, who's issuing these delivery notices? Well, surprise, surprise, JP Morgan, of course, they're a major one. 2 days ago, Clive, on the 7th, they came in and they issued an additional, it was over 1,600 contracts on top of that number that I just mentioned. So they're trying to front run industry by the looks of it, as if they haven't got enough silver already. And it looks like this January is prepping itself to be a warm up, if you like, for the main event. March is obviously the major delivery month. Industrial demand is going to concentrate. And this is when all those huge contracts from the likes of your Samsungs and everything else are going to come to maturity. This is when everyone basically wants to secure their supply for electronics, solar panels, defense systems, all the real world stuff, basically, Clive, that doesn't really care about speculation in the market.
You know, if I was a manufacturer of solar panels or cars or electronic components, I would be very worried that I might not be able to lay my hands on the silver needed, which would cause the entire production line to come to a halt. Exactly. Just for a commodity which I always assumed was just in time, supply chain, immediate delivery. And suddenly it looks like it's not going to be so easy to lay my hands on it.
Exactly that. Yep, hit the nail on the head. The bullion banks are, look, they run their risk models and they assume they have time between January and March to manage this inventory for these contracts, to restock, to prepare. But January has not given them this buffer. So that is going to lead to huge delivery problems in March. I suppose a way of thinking about it, Clive, it's like it works in exactly the same way as a bank run does, but instead of depositors lining up for cash, those contractors are lining up for their metal. And when industrial players see exactly what's happening at the moment, they're going to think, well, what happens if I wait and all the other industrial players try and take theirs in January or February? Well, of course, they're going to stop rolling over their contracts and they're going to demand delivery as well. Otherwise, they will... Go on. Sorry, Clive.
It sounds like the toilet roll syndrome. Every time we have a crisis in the UK, everybody rushes down to the store to buy the toilet rolls, and then there's this rush, who's going to get there first?
Exactly. That's a quintessentially British thing, isn't it? God knows why. But yeah, production targets are going to get missed here, though. They are going to have to break contracts that they've committed to, and that is just not viable. And when all these industrial players do demand that delivery, we are going to have one hell of a problem. And look, the COMEX isn't designed for this. The COMEX is not designed for everybody to take delivery. It is a fractional reserve system that's meant to be settled financially, not physically. So the system, again, as you well know, Clive, it assumes that only a very, very small percentage are actually going to demand delivery, maybe 10%. What happens if that goes up to 20% or even 50%? Well, the exchange is going to face two choices here. It's not just a case of running out of toilet roll there, Clive. They're going to have to go into the open market and they're going to have to buy the silver that they need for delivery. And if they've got to source tens of millions of ounces instantaneously, the price is just going to gap up and shoot up immediately. Option two is, okay, we'll admit failure, declare a force majeure and offer a cash settlement. And basically, Clive, they're going to turn around and say, look, we can't deliver the silver you want, so here's the money instead. There you go. Just take that.
Yeah, at $70 an ounce, when the cost to replace it in the market would be hundreds.
Exactly that, in an inflating currency. Yeah.
So this is what happened in London in the nickel market, wasn't it, a year or two ago, where the price went to the moon and suddenly they said, not only can you not take delivery, we're cancelling all the deals. Everyone who thought they bought nickel can't have it. Your contracts are cancelled.
It's criminal, Clive. It's absolutely criminal. And the minute the market learns that paper can't be converted into that physical, trust in the system collapses completely. Yeah, it was 2022, wasn't it, with nickel, the LME. They just cancelled everyone's contracts and threw the rule book out the window.
Yeah, why did they do that? To save the shorts.
Exactly that. And if institutions are already demanding delivery at the moment in silver with these higher premiums, we know exactly what's coming. It happened before in nickel. I suppose it happened in palladium as well back in 2016, we then saw a six-fold increase in about 4 years. So I don't think, as much as silver is the canary in the coal mine here, Clive, I don't think it's about the one asset class breaking either. I think this is about the credibility of the whole paper-based system being questioned at once. That can be stocks, bonds, derivatives, digital claims. It all rests on the confidence of these intermediaries. And when you look at it with a lot of equity, I mean, when someone owns shares in a company, they don't own a factory or anything physical. They just own a digital record in a brokerage account, which is a claim on a custodian. That's it. And the custodian relies on clearing houses, legal systems, power grids, whatever it might be. And it just takes one link to break, like a cyber attack or whatever it is, and the whole system breaks. So
I mean, look, the whole of the world, investing world, is operating on this digital world, this financial system. We're all into the system where we need to get permission from our banks, from our brokers, from our whoever it is, to do anything with what we own. Nobody's telling me what I can't do with my gold coins or my silver coins because they're mine. I can do what I like. So is that the answer for everybody, to have some of your wealth outside of the financial system?
Absolutely, Clive. There is no counterparty risk. In an inflationary economy, silver becomes the default store of value, particularly for poorer nations like India, for example, a lot of the rural class there, regardless of the industrial demand that I want to come on to with you. But yes, you have to own something physical, either in a vault that's allocated and segregated in your name, that can't be rehypothecated or anything like that, or you take delivery of it. One of the two. There's no happy medium. I can't see any other solution, Clive.
Yeah, so when the brown stuff hits the fan in some way, and it could be a natural disaster, a war, civil unrest, whatever else, you might suddenly find that you want to get your hands on something which your shopkeeper will take off you, and he won't take it. He won't take what you've got to offer because he wants something which is more tangible and physical. And I can tell you, when that happens, everybody on the planet is going to, in no time at all, understand what the value of a silver coin is or a gold coin. Today, 99.9% of the population don't. But getting to understand what the value of it is, when in a crisis situation, people figure it out really, really fast.
Exactly, Clive. And you'll remember in 1997, I think it was, when Buffett, I mean, didn't he buy, I think it was 25% of the above ground resources of silver. Obviously, the price went flying up. In rupee terms, in India, it went up 400%. So this coincided, I think it was a flood or a famine at the same time. And they a lot of the agricultural workers there managed to avoid starvation because they'd all just collected small little amounts of silver and they could afford to feed their families when that happened. It's incredible. It really is a last resort.
Yeah, so when Buffett bought all this silver, he got a call from, I don't know, it was CFTC or COMEX, which basically said the shorts can't deliver the silver to you. And he was forced to put out a statement on the website of Berkshire Hathaway saying, we understand that it's not possible to deliver what you owe us in silver, so we're going to give everybody time to deliver it, which was sort of... Which was kind of his sop to the whoever was calling him up about it, because they were basically going to cancel all his contracts. And so basically the way he did it was saying, no, we'll cooperate and not demand immediate delivery. Exactly. But of course, if he turned around and said, screw them, they've got to deliver on time, that would have sent silver to the moon. And probably they'd have treated him in the same bad way they treated the Hunt brothers.
Oh, I mean, that again, another complete scam. I mean, they really screwed those guys over, just stopped them buying any more silver. They were forced to sell it, and obviously they were borrowing the money to buy that. What was the section, Clive? I think they came out, was it a section?
Silver Rule 7.
Rule 7, yeah. That's and they'll do it again. There's no doubt about that. They really will. But,
so get your hands on the silver while you can.
Yes, and coming back to the Buffett stuff there as well. What you'll notice is a lot of dealers now are going out there and saying, oh, yeah, we'll take the order off you, but we'll backdate it. So we won't actually get it for 3 months, 6 months, but we'll take your money. Now, if that contract goes offside too far, you can be sure as damn it they're going to ask you for an increase in deposits. Shouldn't really be doing that. People are backdating them very, very far, and they don't know when they're going to get delivery of it. They have no idea in reality. So just be really, really careful about that if anyone's doing it in the industry. But yes, look, that's the monetary side that we're talking about there. People can protect themselves against rampant inflation. Silver has a lot more sensitivity to inflation than gold, so obviously it outperforms in an inflationary environment. But the other side to silver here, which is going back to the COMEX again, just looping back to that, well, where is this huge demand coming from? And it's industry, in my opinion, and it's sovereign nations. So, again, through fear of giving too many platitudes, Clive, silver is the second most volatile commodity in the world, next only to oil. It does have, I think, over 10,000 industrial uses. But at the moment, what's so important is it's the most efficient conductor of electricity, which makes it essential for power transmission and the Internet of Things, which is obviously your AI, 5G, and your circuit boards. So it's the one commodity that's going to ensure this high-speed data can be transmitted without any minimal loss. And as the demand for faster and more efficient and interconnected devices grows, this usage is only going in one direction. And to put that into perspective, Clive, this is being very conservative, by the way. The standard AI search uses 8 to 10 times more electricity compared to a standard Google one. And I've seen some reports out there saying it can be up to 30 times. So the grids at the moment, as they stand, they cannot handle that. So these AI giants are building their own grids with these massive solar stacks to power them. Because they know the silver market is just too small to accommodate all of them. So it's so critical to this AI arms race. And all the mood music from what I'm hearing in the industry, and whenever I visit Switzerland or Dubai, wherever it is, they are the ones that are front running this shortage. So look, BlackRock and Microsoft, they announced a partnership in 2024. It was a $30 billion fund to build their AI infrastructure. Back then, that was about a year's worth of supply, but at the current prices, that's still half a year's worth of all supply. And that's not even to mention, Clive, the other AI hyperscalers you've got, Google, Meta getting involved and joining the bandwagon. So that's just one industry. I suppose that naturally as well leads on to solar, because obviously they're putting solar panels on top of all these data centers. And when it comes to solar, there's no demand elasticity in silver. For solar, up to $135 an ounce. We're at 80. It's $135 an ounce just for solar. And that's because the reflective properties of silver and the ease in which it can cover those solar panels mean that there isn't a substitution for it. You can't use copper, can't use aluminium. I mean, the recycling rates of silver are below about 20%. So it just makes it unfeasible. There's no other thing that will do it. And when you combine that, I suppose, as well, with the supply shortage, look, it takes about 7 to 10 years to bring a new mine online, and we just don't have that time. So I think the only thing that could possibly dampen that demand is just a halt in the in energy transition. And the thing is, that's mandated by law. No, it's policy. China, Europe, US, they're never going to stop that. It's a gravy train they're all jumping on, and trillions are being committed in subsidies for it. So so many industries are being retooled to fit this net zero and green agenda 2030 and everything else. This is about policy, and their policy, they just doesn't care about the silver price. They do not care. They're going to steamroll this through come what may. So it is the fastest growing energy source globally, and it's predicted to take up about 20% of silver supply come 2027. Phenomenal. Who would have thought? So yes, there's a big squeeze coming. I could go really technical, all the details and the megawatts and everything, Clive, but I won't bore the audience.
Let's talk about for a minute about the silver price and the motivation for those who are buying it. Now, I have a very small number of people who I know like to buy silver, and I think I can divide the motivations up into two broad camps. There's the camp who want to make some money, and there's the camp which I think is larger, who see a crisis coming down the line and they want to be prepared. You can call it prepping if you like, but they know when the time comes that they'll need to help out their family, their friends, their neighbors, everybody they know. And if there's some sort of failure in the currency system, of trust in the currency system, they believe that will be their way forward. And if it doesn't work out for them, they don't intend to sell it. They intend to pass it down the generation. What are you seeing at your end from people who are contacting gold bullion partners to ask you about buying silver or gold? What's their motivation?
Primarily the latter, Clive, definitely. Trading it and trying to get cute with pricing and pick up a few pennies here and there, it misses the point entirely. It's like picking up pennies on a train track. Yeah, you might save a couple of quid, but then you're going to get wiped out when the market collapses. So people look at the price of everything and the value of nothing. You need to reframe your whole perspective, your whole narrative on what you're actually buying. Oh, I might make some money. No, you're making currency. You're not making money. Money is real physical metal, gold and silver. Sometimes clients will try and trade in and out. In a market like this, where there is such a shortage, premiums are going through the roof, volatility is extremely high, you are going to get burnt. Never ever trade it. You need to be sitting on this with a view to holding it for the next 3, 4, 5 years minimum. Absolutely. Go on, sorry, Clive.
Well, you go on.
No, it's all right. Sometimes I say to clients, maybe it's not the right thing for you. It's very unsuitable. If you want the physical asset, you shouldn't be trading it. Go and trade an ETF or something like that. And that's the way to do it. But it's timing the market, not timing it. That old adage.
And my question is, what do you think could happen in 2026 and beyond with the silver price and silver supply? What's going to happen if everybody needs it for production of vehicles, solar panels, whatever, electric equipment, and the silver isn't coming out of the mines? Are we going to have all our grannies queuing up to...
Yeah, well, you can't. There's no way you can. So there will be a repricing of silver. There's no other choice. You remember cash for gold, Clive, back in 2008, where everyone was queuing to kind of cash their jewelry in and everything with gold prices, and obviously the last financial collapse. Yeah, you could see that again. Families handing in their silverware, looking to get a decent price for it. But you will start to see a seller's arbitrage as well. You're going to see them being able to dictate what premiums they want for it, whether that's 10% above, 20, 30, 40, 50% above, because there just isn't any of it out there. And you can't just turn these mines on because, look, silver, as you know, byproduct of every other metal, zinc, lead, tin, you name it. If those assets increase in price, you'll end up with a bit more silver coming back onto the market. But pure silver mine plays at the moment only account for about 18% of production. It is nowhere near enough. So, yeah, the market will have to reprice. There will be a revaluation of it.
Now, we've got two prices for silver, well, three prices actually. We've got the COMEX price. We've got the price that you can actually buy it at, which is much higher. And then we've got the Shanghai price, which is much higher than the COMEX price. Which is the real price?
Well, the gap between the price of silver in Shanghai and on the COMEX, it always used to trade, Clive, what, 50 cents to a dollar of each other? Then it went up to $8 to $10. I think now it's back down to $5, $5.50.
Yep, it's about 5 today.
Yeah, 5 today. That means the silver's not there.
Yeah, I mean, if it was there, it would be dead easy to load it up on a plane and deliver it to Shanghai tomorrow, close the gap.
Yep.
End of story.
Exactly that. And of course, the Chinese now, as of the 1st of this month, have stopped all silver deliveries. Well, they've mandated some firms to allow it, of course.
So China was a net exporter of silver. And from the 1st of January, it's not possible to export silver from China unless you get permission, which will only be given under a lot of complicated and strict rules, which means the silver exports, assuming they happen at all, will be much less than they were ever before.
Yep. And what a lot of people don't realize, Clive, as well, is, look, a huge amount of trading is obviously from China. They are the largest refiners in the world. It's not just producers, it's the refining, which means if they put these they have put these export sanctions in place, that doesn't just apply to the silver produced, but all the silver processed, which is about 60 to 65% of the world's refined silver. Now, that is going to disrupt the market a hell of a lot. So when there are export controls or licensing regimes, these create these huge ripple effects that show up on premiums, not on the paper or the spot chart. They show up on the premiums. And a lot of people just can't understand why the cost of getting the physical is so much different from the paper price. So we don't need the world to run out of silver straight away for a huge squeeze to happen. We just need the metal to be in the wrong place, in the wrong form, at the wrong time. So one region can have all the coins in the bars while another one needs the refined product. That's one of the other problems we're seeing at the moment. There's all this combination of factors that are adding fuel to an already massive bonfire, really.
Can I take a quick jump, and it'll be very short, because I just want to talk about UK investors and UK taxes. You're in the UK, and you must often get questions about how to structure their holdings of silver from a tax angle. And from a UK perspective, I know you're not a tax advisor, but what sort of advice are people getting from their accountants, their lawyers, their tax advisors as to how they should hold silver or gold? Yeah. And also, what's the way to do it? Should they structure it in pensions or what?
Well, you can't put physical silver in a pension, only ETFs. You can only put physical gold in your SIP and your pension. When it comes to UK investors, the most tax efficient and the safest way of doing it is to keep it in a bonded vault in Switzerland, in Zurich, outside of UK jurisdiction, fully allocated and fully segregated in their name and their name alone. So it's not rehypothecated with anybody else's. Now, in the UK, if you take delivery of physical silver, you pay 20% VAT on it, which is a huge sum of money. It's absolutely crazy. Look, if you're buying it through a business, you can claim that back. I suppose it is a legitimate expense on the business balance sheet. But most people are keeping it in vaults. It's obviously extremely bulky. If you buy 100 grams worth of silver, your vault's the same size as a drinks fridge. It's huge. So the best way to avoid any VAT at all is to keep it stored offshore. That obviously gives you an added element of privacy as well. Capital controls, who knows what they're going to do? Are the UK going to implement something similar? I wouldn't put anything past this government. Do not take silver for delivery really would be my guidance there, Clive. But if you buy UK bullion coins as well, silver coins, as they're considered legal tender, that caveat of British law means you can't tax the flow of currency, and all the gains that you make are also capital gains tax free as well. So you've got a vault that's private, offshore, in your name. You're not paying VAT on it. You're not paying capital gains tax on it. And you get to enjoy all the fruits of what we're going to see. You can sit back and watch the party happen over the next 2 to 3 years, if we last that long, Clive.
So if I was a customer buying some gold or silver from you, is this something that you can arrange where my physical metal is deposited in a custodian in Switzerland, and it's in my name? There's no third party between me and the custodian. It's directly my gold. I can get a statement from the custodian saying, hold this on your behalf. And would they tell me the numbers, if it was bars, tell me the bar numbers, or how does that work?
They don't go as far as putting the individual bar number on every one, Clive, because they just seize up, I think, the vault in terms of practicality and logistics. But you're right, yes, you do get all that third-party paperwork with the number of bars on there, what they are, the weight of them, and everything else. Yes, most people are, however, just buying the coins purely for the tax advantages. But there's very, very few coins out there as well now. You'll see a lot of dealers out there just completely out of supply, or like I said earlier, trying to backdate those contracts.
So I could just turn up at the custodian with my proof of identity and all the necessary paperwork to withdraw my physical gold, and obviously in Switzerland, and as in the UK, there's no tax on withdrawing it. I could take it out, and of course there's no tax moving it around in Europe, because you have to declare if it's over 10,000, I think, but I could actually physically get it. And if it was silver, I presume that if I withdrew it in Switzerland, I'd pay the Swiss VAT, which is 8.1%, and I guess if you import it to the UK, probably pay another 20% on top of that. But exactly. I could physically go and join my gold or my silver and put my hands on it if the push came to the shove. We're in an emergency situation and I need it badly.
Yeah, I've had a couple of clients over the last few weeks actually just arranged to go and pick it up, Clive. Yeah, if the worst comes to the worst, you can.
Yeah, and I don't blame them. I've been watching a lady, she's a Swiss national, who was sanctioned by Europe for being a friend of Putin, except she's never met Putin. She doesn't know who he is. I mean, she's got nothing to do. Her crime was to criticize France over their policy in Africa.
Wow.
How
ironic.
To get her sanctioned. And basically, the long and short of it is, and she's a YouTuber, so you can look her up. I can't remember her name. The long and short of it is, all the bank accounts have frozen. All her bank accounts are frozen, except her post office account. And even her post office account, when she tries to pay her landlord her rent, the bank which receives the rent refused to receive it because it's coming from a sanctioned person. She can't get on a plane because no airline will fly her. Even Google, she's a YouTuber, won't pay her because the money would cross over to get to Switzerland, would cross over a border. Basically, she's been frozen out of the system.
It's the tip of the iceberg, Clive. This is pure totalitarianism coming for everybody. And if you've got anything digital, they can seize it immediately, which goes back to what we were saying earlier. You don't own anything.
So you and I don't criticize France. They're wonderful, aren't they?
Perfect. Absolutely. Yep. I love the government there.
Exactly. Nick, what do you say? What do you say when someone calls you up and he's not sure? Should I buy gold? Should I buy silver? Which way do I go? Should I buy it at all? What's your conversation like with them?
I suppose it depends on your risk tolerance a lot of the time. If you've never done it before and you want something with a proven track record that's always going to go up in times of crisis and inflation, gold's your pure monetary asset, of course. But if you want to add another string to your bow and you want a bit more volatility, given what's happening to the silver price at the moment, if you do have the luxury of sitting on it for 5 or 10 years, then I'd definitely add that too. So traditionally, Clive, we always used to see people going 20-80 with their portfolios, 80% gold, 20% silver in their precious metals positions. But now it's going 50-50, if not 80-20 in silver's favor. I've got some people calling up putting 100% of their exposure into silver because it's like a slingshot. Gold takes off and then silver rockets past it every time in history. It's happened every time. So there are so many applications coming through for it now, Clive. I think you'd be silly to ignore silver and just put a pure 100% allocation into gold. I really do.
If you take only 1% of the world's money that is currently invested and you move it into gold, you're going to have gold at over $15,000. The U.S. is an incredible country and with, fabulous people, but it does have this incredible ability to walk right up to the abyss, look at it, and then walk back. And it's happened time and time again in U.S. history. And it's happening right now. The budget deficit, it's the promises that they've made to their people that they can't fulfill. What do you do then? You devalue your currency. And that is the time-honored way to do it, from the Roman all the way to today. If you look at every great civilization, they all ended up devaluing their currency, and that's how the empire finished.
I have to share this story. I don't even know if you remember this, but I feel I have a special bond with you because when I was starting my journalism career as a very young cub reporter at 20 years old, you were fully, already the reigning king of Franco, Nevada at this point. But my editors said, see if you could get an exclusive interview with that Lassonde. And, I tracked you down. I was a no-name journalist at the time, but you gave me that interview, and that kind of put me on the trajectory that I'm on now. So thank you for that. You gave me that shot.
You're more than welcome. Thank you. Thank you for sharing the story.
But with the time we have, obviously, I want to get your thoughts on this current market and on the world in general, Pierre. I mean, you have some pretty bold forecasts for gold, $17,250 to be exact.
And I may be conservative.
Right. So let's start there because many people in the room might not know how you've come to this number. Can I say it? It's a bold call.
Yep, it really is. And I understand that. And then, looking at the last few years, gold going from, 1,800 to 4,150, not that I looked this morning. Well, how can, it go a lot further? And some of the speakers over the last day and a half have talked about different reason why it would go. Frank yesterday talked a lot about the de-dollarization, what's happening in China in particular, and that's very real. And at the end of the day, when you look at the world today, what is happening, it's that gold is being remonetized within the architecture of central bank reserve handling. So it's not only the central banks, but it's the wealth funds of various countries, private offices, family offices, hedge funds, etc. They look at gold and being remonetized. And if you take only 1% of the world's money that is currently invested and you move it into gold, you're going to have gold at over $15,000. And the reason is very simple. Gold is a small world. There's only 220-some thousand tons that's ever been mined that's still floating around the world. And on a yearly basis, there's only about 3,600 tons being mined. And that production only goes up by like 1 to 2% per year. But the reality is that it's been absolutely flat for the last 7 years. There's not been one more ounce produced on a 7-year basis than it has been. It's very difficult to increase production because first you have to find the deposit, then you have like all the environmental, stuff that you have to go through, then you have to build it. So even though the gold price is $4,000 today, you can't go to a mine and turn a new mine on tomorrow morning. It takes time. And I've been to several of the presentations over the last day and a half. And you see timeline like 2029, 30, 31, 35. Well, that's quite a few years down the road. So you have to deal with what you have today. It's 3,600 ton a year, 220,000 ton. If, part of the money that's out there wants to move into gold, gold's going to go higher, period.
But you even take it one step further than price, I want to say. You make a very compelling statement saying we are living in a life-changing period where gold could go back as a reserve or is on track to go back as a reserve currency. Is that correct?
Well, it is. It is being remonetized. And you see, for example, central bank reserve 10 years ago, 88% of the reserve were US dollars, and gold was not even barely 10%. And today, the US dollar is down at 58% of central bank reserve worldwide, and gold has gone up to 20%. I believe that there's more room for gold to go up because when you look at the currencies out there, whether it's the US dollar, the euro, the Japanese yen, the British pound, I'm talking about the currency that are free floating, they all have the same issues. And the same issue is they all have tremendous budget deficit that is being accumulated on top of, like, the debt that are over 100% of GDP. And essentially, we're at a point where all the welfare system, all the benefit system that were created in the 60s and 70s under economic conditions that were post-war, great growth, population growth, today, none of the governments can afford them. But if you're a politician, are you going to go and get elected if you tell them, I'm going to cut your benefits? I'm going to, spend less and I'm going to default on my obligations. And the answer is no. You get elected if you promise more. Look at what's happened in the United States. Well, the United States, under the new administration, I mean, it's a smorgasbord of, eye-watering deficit, on top of, already 38 trillions of debt. They have, a really difficult situation. Europe is in no better shape, okay? Like, France, look, just like how many prime ministers they've had just in the last year. They cannot get to turn, and they're just trying to keep like they've raised the pension age to 64. Now they want to bring it back to 62. They can't even afford 64. They want to bring it back to 62. They have a huge problem. Germany, Italy, all of them. And so if, at the end of the day, the answer for a lot of, people is to say, okay, I'm going to move part of my money into gold, which is, the real safe asset at the end of the day.
We'll get right back to the interview, but this is an important moment to ask yourself, when the next crisis hits, will you be properly positioned or wish you prepared earlier? I've spent over 2 decades reporting on global economic shifts, and what's happening now is unprecedented. In moments like this, timely decisions are critical. That's why we've put together the Private Wealth Playbook. It's a free guide showing you how to use gold and silver strategically for protection, privacy, and long-term performance. Moving countries so fluidly as I see right now. I mean, is there any good place to be living right now, Pierre?
Well, I just moved to Switzerland.
The Italian part.
Oh, yes. I love the Italian part. It's Swiss efficiency with Italian flair, like I do. But truly, Switzerland is one of those rare countries that, I think it has to do with the form of democracy that is unique to Switzerland, that really doesn't permit the politician to build roads to nowhere or to give money to companies. Because they're accountable directly to the people.
Just on this note, and I don't want to go on a tangent, but I am curious as a Canadian, because we have, had conversations about how Justin Trudeau basically destroyed the country over 10 years, and we have many Canadians in the audience. Are you more optimistic for Canada now under Carney?
Oh yeah, I am definitely more optimistic. I think that Carney has seen the light. Carney is, frankly, he should have run as a conservative. Because he's far more conservative than he's liberal. His policies are to develop the oil and gas industry. Look at what the money that they're putting into mining. I mean, for us in the mining industry, it's incredible that finally Canadian government recognized that mining is a key part of our country. We haven't seen that in 50 years. I think it's fabulous, and they're putting money in the industry. Unfortunately, they did let all of our big mining company go in the, in the 25 years ago. The Alcan, the Falconbridge, the Noranda, the Inco, those are all gone, and we have to recreate the industry. But Canada is the second largest land mass in the world. Where do you find mine? Is on land. Okay, so there's, I believe, a great future for Canada.
Do you think they'll start adding gold back to their reserves? As we know, they sold all their gold, and the pushback I often get is, oh, we could just mine it. We have so much of it. But to your point, you can't just mine the gold out of the ground. But do you think they'll start adding reserves back, Pierre?
In terms of Canada, whether they're going to do that or not, we're so tied to the U.S. that so far it has not been like even thinkable to do that. But I think if we want to be independent of the U.S., Canada will probably have to start, like, getting some gold in its current reserve currency.
Getting back to the U.S., you have been vocal in saying that Trump has been the greatest gift for gold.
Absolutely. Yeah, I mean, Trump is, is the greatest gift, and as long as he's in power, gold's going to keep going up.
I know Frank brought this up yesterday. We had done another panel with Robert Friedland, yourself, and Frank, and in it, you were optimistic at the time, saying there's no other alternative to the U.S. dollar. That was maybe 3 years ago. Have you since changed your stance on that?
On a day-to-day basis, the U.S. dollar is still the easiest currency to have in your portfolio because the market are so large, so liquid. You just push a button, you get your money, you can come in and out. So that part is still valid. The part on the de-dollarization, what China is doing, like Frank touched on it a bit yesterday as well. The ICBC, which is like the biggest Chinese bank, is just opening up a 2,000-ton vault in Hong Kong, and it will allow the various countries that are within the sphere of influence to change their renminbi or yuan into gold. So essentially, they're going back to the old monetary order that we had after the war, where the central banks could change their US dollars into gold until Nixon closed the gold window because the US was running a huge deficit, and the French figured it out first. And they were sending all their dollars back and give me the gold until they finally, they were going to run like Fort Knox, like absolutely down to nothing. And they closed the gold window. So today, China is doing that role. But if you look at the percentage of trade that is being done in renminbi, it is going up every year, okay? But it's got a long, long way to go. And unfortunately, the renminbi or yuan will never be a reserve currency under the autocratic Communist Party that you have in China. Nobody will ever trust them.
I think the other interesting thing you mentioned, and we were at a very great dinner last night with great conversation, and I think you and Rick Rule were the only real optimists in the room. And something interesting you said that stuck with me is you feel the U.S., just when it looks like it's getting to that cliff and it's going to fall over, somehow magically it saves itself from the abyss. Can you talk a little bit on why you think that?
The U.S. is an incredible country, and with fabulous people. How they elected the one they elected, go figure out. But it does have this ability, this incredible ability to walk right up to the abyss, look at it, and then walk back. And it's happened time and time again in U.S. history, and it's happening right now. And the abyss, of course, is the budget deficit. It's the debt, the federal debt, and the promises that they've made to their people in, like old age pension fund and everything else that they can't fulfill. Rick Rule touched about it this morning. Is like 120 trillion of future debt, and they can't afford it. But that's not just the U.S. Again, it's Europe total. Okay, all the G20 population is in decline, and whereby in the 1960s you had 4 workers for 1 retiree, today it's 1-to-1. The math don't work anymore. So what do you do then? you devalue your currency. And that is the time-honored way to do it from the Roman all the way to today. If you look at every great civilization, they all ended up devaluing their currency, and that's how the empire finished. I mean, the Romans started to devalue the currency in 180. They devalued the currency by 80%, and by the time the barbarians showed up at the door, there was no money. The real money disappeared.
So, I mean, you have grandkids, many grandkids.
Yeah,
right?
7.
So, what do you tell them when they say, or maybe you have these conversations of what will life look like for them in, 10, 15 years, Pierre? I mean, people talk about an apocalypse and,
No, I'm
very-
not. Life is better than it's ever been, and it will continue to get better. Like if you look at all the inventions that are done, all the patent being filed, life on the planet today is so much better than it was when, I was born or when I was a teenager. And I've seen the changes, like in the cars. I still have a 1965 car. Every time I drive it, I have to relearn how to drive. There's no power brake, there's no power steering. Okay, and so you get to a red light, you push the brake, nothing happens.
and it's the wheel
okay?
that's impossible to.
No, and then you push harder and nothing happens. And then you just like stand on it and then finally it breaks, okay? I mean, so just to think about the incredible benefits we've had, life will continue to get better. And people adapts, okay? You look at, hyperinflation like in Argentina. I've been there several times. People adapt, okay? The idea that like the world will come to an end, that's not going to happen.
I find it fascinating because you're from Saint-Hyacinthe, Quebec. If anyone knows, that's like farmland Quebec.
Mhm.
Looking back, I mean, if I had told you this when you were 10 years old, that all the success you would have, what would you have said to me?
You're absolutely crazy.
What do you think was because I interview, obviously people like you, Frank Juice, and I see a common denominator, right, amongst you. What do you think made it for you? What do you think was the key to your success, Pierre, in terms of personality trait?
I think surrounding myself with better people all the time, and they make you look good. And I think that the other trait that I've used quite a bit is being able to make decision very quickly under, like where you don't get all the facts, but you have to make a decision. So that's also been one of the trait that has helped me a great deal.